Good morning, everyone, and welcome to the Brazilian Mining Investor Day, organized in partnership with the Toronto Stock Exchange and TSX-Ventures Exchange, Infor Financial, and Adelaide Capital, the first session of the second Brazil-Canada Virtual Conference, which will bring a series of important discussions on regulatory framework, capital markets, ESG, diversity and inclusion, exploration, smart mining, innovation, mining financing, among others, and will take place starting today until May 31st in preparation for the 16th Brazil-Canada Conference at PDAC that will take place in person in Toronto between June 13th and June 15th. I'm Carolina Albernas, CEO at the Brazil-Canada Chamber of Commerce, and I will be your MC today. We hope that you find the content that you share in the next few weeks fruitful and relevant for your business. The platform you're in provides also the opportunity to connect with their peers, colleagues, and professionals from the mining sector. So don't be shy, and before and after the event, go to the networking tab and check out who else is here online with us. There's also a matchmaking tool available for you, so meaningful connections can happen online. Let's make it the best of it until we can meet again in person in June. Before we start, just a few reminders. The discussions today will be performed in English. We are offering simultaneous translations for the whole program, and you can access the Portuguese version by switching the language in the interpreter icon on the bottom right screen of your Zoom screen. Also be able to ask questions to the panelists as the discussions happen. So please use the Q&A box in the Zoom screen to send questions to our speakers. We'll do our best to answer all the questions during the sessions, but if any of the questions cannot be answered live, we'll make sure to revert to you after the event. We have today a full program, so without further ado, I would like to invite Frederico Marques, of counsel at Siscon Barrier and head of Canada office, founder and director at Fides Mining, director at Sigma Lithium Corp, and chair of the BCCC Mining Committee to perform the opening remarks. In the meantime, I'll just ask all the other speakers to close their cameras, and we'll be calling you when it's your time to speak. Fred, thank you for being here, and the mic is yours.
Thank you, Carolina. Always a pleasure. Hello, good morning, everybody. It's an honor to welcome each of you today to the Brazilian Mining Investor Day, an event organized by the Brazil-Canada Chamber of Commerce in partnership with the Toronto Stock Exchange and TSX-Ventures, Infor Financial, and Adelaide Capital. The Brazilian Mining Investor Day is part of BCCC's signature event, Brazil-Canada at PDAC. With PDAC Convention 2022 moving to June this year, and considering the success of our 2021 online event surrounding PDAC Convention 2021, the Mining Committee of the BCCC decided this year to have a hybrid event, online and presential, starting today with the session highlighting some of the trends and investment opportunities in the Brazilian mining sectors and Canada's capital market. Today, we have here with us private and public mining companies that are currently developing incredibly interesting mineral exploration and mining projects in Brazil. We are also delighted to host the Brazilian Deputy Minister of Mines, Honorable Pedro Paulo Dias Mesquita, speaking about key positive regulatory changes and investment opportunities in Brazil. Pedro Paulo, thank you for your participation. You are leading important initiatives to foster investment into the Brazilian mining industry, and I would like to congratulate you for all your efforts. We are looking forward to welcoming you in June this year. On the Canada side, top-notch experts on Canada's capital markets and Neville Dastoor from Infor and Dean McPherson, head of global mining at TSX, will share their thoughts and insights on Canada's capital markets and what they are envisioning for 2022. The private company panel will be moderated by Guillaume Legare, head of South America at Toronto Stock Exchange and TSX-Ventures, and will be Patrick Panero, co-founder, director, president, and CEO at Fides Mining, and Kaique Souza, Director of Finance and Corporate Development at Fides. Deborah Honig, President at Adelaide Capital, will moderate the public company's presentation, which brings Jim Patterson, CEO and Chairman at ValOre Metals, Ana Cabral Gardner, co-founder, co-chair, and co-CEO at Sigma Lithium, Louis-Pierre Ginac, CEO at G Mining, and Nick Appleyard, CEO at TriStar Gold. As we are moving forward to a new quasi-normal post-COVID pandemic and following closely the new risks facing the global economy, specifically the horrifying and evil Russian invasion of Ukraine, which is now dominating the macroeconomic narrative, we also experience strong recovery of commodity price, a surge of certain commodity price such as lithium and iron ore, a shift in sustainability, ESG practice, and incredible investment opportunities in countries like Brazil. It's always important to remember that the mining industry has a crucial role in supplying the minerals and metals critical for a low carbon world. Companies doing business between Brazil and Canada have the benefit of building their sustainability strategy based on solid pillars that allow them to quickly improve and implement robust ESG strategies. And two, attract and allocate smart capital, ESG-focused capital. Today, we hear from senior and experienced executive of mineral exploration and mining companies with projects in Brazil about their approach and strategy to operate and excel in this new world order that is fast changing and shaping up the mining industry. Without any further ado, I would like to thank the Brazil-Canada Chamber of Commerce and each of the speakers today for their valuable time and efforts in participating and supporting the Brazil-Canada Chamber of Commerce. A special thank you to the BCCC staff, the TSX, Infor, Adelaide Capital, and our sponsors. We already have a record number of attendees and sponsors, and I believe that PDAC Convention 2022 will be second to none. Enjoy the Brazilian Mining Investor Day. Carol, Dean, over to you.
Thank you, Fred. Thank you for the words. So now I'd like to introduce Dean McPherson, Head Business Development Global Mining at the Toronto Stock Exchange and TSX-Ventures Exchange, to share his thoughts on the Canadian capital markets. So Dean, mic is yours.
Thank you, Carolina, and thank you, Fred. My pleasure to be here as we're at TSX and TSXV. We're always very happy to support this initiative, the BCC, and this year, of course, is no difference. Regrettably, we have to be virtual again this year, but certainly we're looking forward to seeing all of you at the events that we have planned for in person at PDAC in June. And of course, thank you for everyone attending this morning and your attention. I have a presentation. I promise it's not a boring presentation at this time of the morning. I will share my screen and we'll go from there. So let's see if I can, if I've learned anything over the past 2 years. There we go. So yes, you can see my screen. I'll just go into presentation mode here. So as Carolina mentioned, I am Dean McPherson, Head of Global Mining for the TSX and the TSX-V, or what we call the TSX-Ventures Exchange. So I'll just start by introducing ourselves to those who might be watching or are not familiar. When it comes to global stock exchanges, there are really 5 hubs globally for equity capital markets, and certainly we are a big player amongst those 5. Very robust marketplace. We've raised close to 235 billion over the past 5 years alone. Last year was a pretty significant year. As I'll point out in this presentation, we raised 57 billion across all sectors, of course, not just mining. So why Canada? You know, I mentioned there are 5 real hubs globally, but there are certainly some distinct advantages for Canada and for you to consider Canada, and certainly advantages that we have having our exchanges located in Canada. And the most primary, of course, is that Canada is a very stable and reliable, predictable, if you will. Some might say boring, but that is sometimes very important when it comes to finance and banking and business. And certainly we're top ranked amongst G20 countries for financial services. So that's a key advantage for us. As well, our location is right. We're very close neighbors to the world's largest pool of institutional capital, and combined between Canada and the US, we are almost 5 times the amount of institutional capital available globally, compared to our nearest competitors. So that's quite significant. And as I said, proximity is key, and time zone is key, believe it or not. And you'll see later on as well, another key advantage that we have is the regulatory environment that we offer to participants in our marketplace, especially compared to that giant gorilla that I mentioned, the US capital markets. Though it's great to have access to that US capital markets, but when it comes to having your company listed there can be some challenges, some risk when it comes to the class action lawsuit environment that's there. Canada offers a much less litigious environment, and that can be quite significant, believe it or not. As well, when we compare ourselves to our London competitors, for instance, LSE, we do offer a lower float requirement for listed companies. And what that means is that you are able to list a lower percentage of your outstanding shares. So you retain more of your company, really, that you have that option. That's a significant advantage. When it comes to flexibility, we have structures like the bought deal structure here in Canada, which is quite unique to Canada, and it's significant. And what bought deal structure is, it really creates, it takes the risk off of a financing and puts it more on the dealers, the financiers, and takes it off the company. So you are offered X amount of capital, and then you sign a deal, and you're guaranteed to receive that regardless if the market changes in next week or so. And these days that's important because of volatility. The window, the positive market conditions that create an opportunity to raise capital, that window is getting shorter and shorter because of increased volatility in the marketplace. As we all know, this year is probably the best example of that. As Fred mentioned, global external factors, certainly we have no control over those sometimes. Of course, the key advantage, again, I think probably, the most significant here is that you're joining a marketplace that is a leading marketplace, particularly when it comes to mining. This is we have more mining companies than any other exchanges globally. So you'll find that we have a larger percentage of capital raised in our marketplace over when you consider a period of time, let's say 5 years, for instance. And certainly, we offer a two-tier system that has a supporting ecosystem that really supports companies at all stages of growth, and that's significant as well. Sure, there are other markets with two-tier systems, but the difference with our marketplace is that our two-tier system is quite vibrant. The rate, you can judge that by the rate of graduation that you see from our junior market into our senior market, and the analyst coverage that is paid to our junior marketplace as well. So you're not joining a pool of companies where you get lost. You are paid attention, particularly as a mining company, and you are paid that attention regardless if you're a producer or you're an exploration company. There is a place for you in our marketplace, and certainly we think these key points are significant differentiators for us in the global marketplace for equity capital. So as an exchange, both combined marketplaces, we have over 3,400 companies, 3,451 issuers listed with us, to be exact, representing a market capitalization of 4.3 trillion. And last year, as I mentioned earlier, we raised $57 billion in equity. Those companies that are listed with us, this is total across all sectors. And it's quite a significant year last year. And I'll touch on that some as we go on here and talk a little bit about what that means for us in 2022. Located in Canada, I talked a bit about why that is significant for you to consider and why it is for us as a big selling point for us. But also what's significant is that even though we're located in Canada, we are a global market. 40% of our trading actually originates outside of Canada. So you're located in Canada, you have the security of Canada, but we offer you the reach and the accessibility of global investors, global trading. 25% of our member firms are actually headquartered outside of Canada. And you see the names here as far as Asia, and of course, many participants from the US, which is that key largest pool of institutional investors I mentioned earlier. When it comes to mining, we are indeed global leaders. As I mentioned earlier, we 42% of public mining companies, publicly listed mining companies globally are on our exchange. And as a result, a third of every dollar that's raised globally when it comes to equity are through mining companies listed on our exchanges. So we have a robust junior market, as I mentioned, on our senior board. Half of the mining companies listed on our senior board, the TSX, actually started life on the TSX-V. We're very proud of this because, as I said, it differentiates and shows the strength of our TSX Venture Exchange, that half of the companies that are listed on our TSX, the senior board, are started life on the venture, and we've seen that time of graduation, meaning the time from when a company is listed on a venture to the point at which they graduate. We've seen that being shrunk more and more over the past 5 years. Right now, I think we're at 3.5 years. Companies will spend about 3.5 years on the venture exchange before they decide to graduate to the senior board. And what graduation to the senior board does, really, it opens up another level of investors. There are many global investors, for instance, who might have investment constraints where they need a company to be listed on the TSX senior board, or they might companies might simply desire to be included in global indices, and often this is a great opportunity to do so if you're listed on the TSX rather than a TSX-V. So very proud of that stat, and of course, as I said, the ecosystem to support both our markets are there. We have over 250 analysts covering mining companies on our exchanges, and of course, that's significant. The ecosystem to support you as you grow is there. I like this sheet because it shows the reach of our mining companies, that we're indeed a global exchange. Close to half of our 5,200 properties represented on our markets are spread across the world outside of Canada. So that's significant. We're a Canadian marketplace, but we're certainly a global mining hub. So luckily for us, of course, we're not significantly, our markets are not significantly impacted. You'll see Russia and CIS. So only 2.2% of our properties are in that region. And so there's not been a significant additional shock from that for us, luckily. Of course, of significance for this audience is that Latin America is a significant representation outside of North America for us. Canada and the US, of course, are the largest, and then beyond that, South America is our next most concentrated region when it comes to properties represented on our marketplace. We're very, very cognizant of that, of course, and our commitment to the region is perhaps best represented by the fact that we are one of probably the only global mining exchange that have full-time representation in Latin America. In my colleague Guillaume Legare, who you have not met yet, you will certainly do so in a few minutes. So 2021. A significant year in mining, really globally, actually, not only on our exchanges, but the great news was that it was global. I think 2020 was already a good year. We knock wood, the mining sector has been fortunate in that the impact of beyond the initial shock of the pandemic in 2020, March 2020, the mining sector has been extremely resilient, and certainly we had an upturn in 2020, and we're very grateful for that and very happy for that, as everyone here will agree. 2021, we were not expecting to be even better, and it was. Last year, in 2020, we added 57 new issuers to our markets. Last year, that number went up to 80. The financing were larger. We had less mining financings in 2021, but there were larger financings to the extent that we raised, companies to our exchanges raised $10 billion compared to the $7.5 billion that was raised in 2020. And of course, another observation last year was the trading activity. Trading went up, so the mining shares traded to our exchanges in 2020 was 59 billion shares. So a very good year on our exchanges, and globally, really, our partners in Australia and London and New York as well did very well. Of course, we led the pack in most cases. So very, very, very grateful for that, and it certainly begs the question: what were the drivers there, and how will 2020 fare out? Considering, is there anything we can learn from 2021 that might give us some clues as to what 2022 will bring? Of course, no one predicted the start of this year that we are having in terms of the external shock that came upon us just as we're exiting the pandemic. But that's the nature of life, I suppose. Again, there are a few indicators that I think will leave us still positive this year, going into 2022. Takeaways, if you will, for 2022. Fred mentioned the ESG factor that certainly came to prominence last year. Certainly, we think ESG will continue to be front and center. It certainly felt like it was peaking. It's almost given now that the ESG consideration when it comes to the investment decision process on the buy side, meaning investment side, institutional investors, is now established as a requirement, not only for senior issuers, not only for senior companies, not only for producing companies, but even exploration companies. ESG consideration, environmental, social, governance issues are being considered in investment decisions. A few years ago, BlackRock started this, I guess, brought the spotlight onto this issue by publicly saying and establishing their position when it comes to ESG and the investment decision process. Now, I think it doesn't matter the size of the fund. You have to have ESG disclosure. You have to consider this when you're approaching investors and when you're approaching going public. We think this trend is going to continue into this year, well into this year. We think it's here to stay beyond this year as well. Another thing that was significant last year that we think is certainly positive for the sector, will continue to be, is the whole global emission reduction targets and accelerating demand for EV metals. And how this relates, well, we all know how it relates to mining. Mining is the beginning of the supply chain for meeting most of these global emission reduction targets. What was significant last year, we observed, was that finally mining was being recognized beyond the professionals who participate in our sector, but certainly by, I would say, layman, if you will, generalist investors recognize that, wait a minute, we can't make solar panels, we can't make batteries, we can't make cell phones, we can't make, all of these ideas that we have, objectives that we have to reduce emissions, really are centered around ultimately the mining sector and the supply of the metals and minerals required to produce the batteries, for instance. Because batteries, many studies will show that EV batteries are a key component, perhaps the largest component if we ever have any hopes of meeting these global emission reduction targets. So, despite some rhetoric and some nonsense that was spoken at the conference last year, certainly I think this was mining's role was recognized last year, and I think this will continue, of course, naturally. Of course, the other big supply participant in the supply chain of meeting these standards, and certainly the electric, shall we call it, revolution, are base metals and the infrastructure that's required to support this transformation, in particular copper. The supply demand imbalance has not changed. That will only continue. And certainly we're seeing commodity prices responding. Fred mentioned lithium. I will add copper, and of course you mentioned iron ore. We're seeing those are key commodities to build infrastructure to support our I guess evolution, if you will, or growth as a population, a global population, really. Another factor that popped up last year that was quite evident in our marketplace, and we expect this to continue going forward. And I know on our program we have someone talking a little bit about the M&A, but M&A was significant last year. We saw perhaps most so in the lithium space as participants rushed to secure supply. And, there were observations where even end users of lithium batteries were seeking to participate in the M&A rush to secure their supply by going upstream. And we expect this to continue. And as well, in precious metals as well, as company and base metals, as companies rush to secure supply because of the underfunding and exploration that we saw in the previous years. For us as a marketplace, we saw new participants in our market from afar, from other markets. We saw uptick in dual listings from the Australians, for instance. Large Australian companies were seeking to come over to our marketplace to list in North America as they seek to acquire companies in the Americas, whether it be Latin America or Canada. We expect to see more of that. Earlier this year, we had Hot Chili, which is a copper play in Chile, joined our marketplace. This is an ASX listed company coming over as, we expect to see more of those companies. And as I said, as more companies seek to acquire properties because of this shortage in supply and the low exploration investments that we saw in previous years, we expect to see M&As picking up, continue to do well. And it's good for our marketplace because it's great to see our companies realizing value for their shareholders. And more companies will come in behind the ones that are taken out. And larger is better. It's greater efficiency for our sector as well. Also, at the end of last year, we pointed to the pandemic recovery. And of course, we saw the impact that Omicron variant had in the last quarter of last year. We expected this year to continue to be a bit volatile, as there might be more variants, you never know, or whatever. It's just volatility is a mainstay in our opinion as we go forward. Of course, the start of this year has brought global geopolitical risk to the fore. Jurisdictional risk was always perking up last year with change in governments globally, in Africa, in South America, and the US as well. Those are a risk that are present and add to volatility in the marketplace. And coming out of the pandemic, a lot of countries and governments were very concerned about redistributing wealth, etc. And we saw this as another input into the increased volatility. For us, we encourage our issuers to consider a flexible marketplace so you can move quick, because that's the solution in the volatile environment, is that when the market is positive, you have to be ready, prepared to move quickly to access capital. And in the long term, though we might be volatile, usually what's key to watch in the marketplace is the upward trend. And we do think the upward trend will continue for all the points that are 1 through 4 here that I mentioned. Another observation that we saw last year was the persistence of gold as the preferred hedge versus crypto. There was a lot of talk, particularly in the latter half of the year, around gold being replaced as a preferred hedge against inflation with the introduction of a new asset class, crypto. Of course, our view on this was that, sure, it's good to have another asset class. It's always good to have a new asset class. We are certainly a marketplace that encourages innovation, and we're embracing crypto as well. But we see the threat to gold as, I would say, further more long-term than short-term or medium-term, just because of the growing pains, if you will, from that crypto presents. We expect that regulatory and volatility in this marketplace will still keep gold ahead. And I think the market is certainly reflecting that even more so this year, as we've seen so far. I think there have been many observations that gold has not lost market share to crypto as a hedge. So that's positive for companies that are focused on precious metals, of course. Certainly last year, I'll finish here. Another key observation that we saw, and very encouraging more than anything else, of course, was the return of the generalist investors. This started actually in the latter part of 2020, and it continued into last year. And we think it has a lot to do really with how the mining sector has evolved over the past 5 years. And that we think a large part of that evolution has been the embrace, how mining companies have moved quickly to embrace the requirement for ESG disclosure, and really not only disclosure, but operations. And this is at all levels, particularly in the junior marketplace. And certainly, you know, we saw investors not giving companies a pass because they're early stage exploration companies, and companies in the past we used to say, oh, we don't have the budget to do the disclosure of the big guys. That is no longer an excuse, and we think companies have responded well, and we think more junior companies are prepared to meet investors even before they decide to go public, and we certainly are doing our part of that to help that. If you haven't yet checked out our ESG 101 platform, where you can learn and best practices, and certainly use some of the tools that we have to help you as a mining company meet these disclosure requirements, you should contact myself or Guillaume directly, and we can point you to that and provide whatever information. And what we have also done, we have a program called the Growth Accelerator program, where we work with companies even before they get listed, where we provide learning modules around ESG disclosure, governance, etc. And we prepare companies to enter the public marketplace, because you have to be prepared as a public company, and the preparation can't start at the point of an IPO. It has to start before. I mentioned last year we had 80 new issuers joining our marketplace. Of 2 of those from Latin America, I want to just highlight here, were Mineros out of Colombia, which is the largest listed gold producer on the Bogota Stock Exchange. They added a Toronto Stock Exchange listing to their portfolio, and that's been great. It's a great company. They have properties all over Latin America. And also Aclara, which is a spin-out from Hochschild, which is a LSE listed company. They spun out their rare earth asset to Aclara, which is based in Chile as well. And those 2 listings came over, and I mention them here because it's a great example of how we work with companies even before the IPO process, where we offer professionals come in and tutor companies around ESG disclosure and general disclosure for marketplace, regulatory disclosure, and as well as best practices in governance and boards. And so it's a general preparation to enter the marketplace, and we see more and more of our issuers taking advantage of this, and we think it has a large part to do with the revival, if you will, of the junior marketplace. And last year we saw many instances where trading on our junior market, the TSX-V, actually equal the trading volumes that we see on the big board. And so this was very encouraging. And from my experience, certainly, and from our experience as an exchange, when the junior market is doing well, it usually is a good sign for the overall market that the upward trend is here to continue for a while. We saw this back in 2007, and it was very encouraging to see it last year. So for those reasons, we're very, very positive about 2022, despite the increased volatility that we've seen this year. But as I said, we have shown resilience, and we're very encouraged that that resilience will continue. And I think I'll leave it there for now. Thank you. If you have any questions, or you want to find out how to get listed on our exchanges, please feel free to reach out to myself or Guillaume Legare. As I said, Guillaume, of course, is fluent in Portuguese and Spanish and English and French as well. So you're pretty covered. And as you see, I'm based in Toronto. So and as I said, I come down to Latin America quite often. So there's always an opportunity to meet. With that, I'll leave it. Thank you, Carolina. And thank you for listening.
Yeah, thank you, Jean, for the presentation. Really appreciate you being here with us today, and looking forward to seeing you in person soon in June. So now I'd like to introduce then Guillaume Legare, as Jean mentioned, the head South America at Toronto Stock Exchange and TSX-Ventures Exchange, who will be moderating the next panel with the presentations of the Brazilian private company. So the order of the presentation will start with 4B Mining, followed by Fides Mining, and then Pilar Gold. So Guillaume, it's with you. Thank you.
Great. Thank you, Carolina. Thank you, the BCCC, for the invitation. It's a great opportunity to be still in the virtual mode and have everyone involved in this special day until we see each other in person. So my name is Guillaume Legare. I'm head of the South America for the TSX and the TSX-Venture. As Dean mentioned, the TMX group made a strategic decision to have a full-time presence on the ground. I started my presence in Brazil in 2019, moved to Lima. So I'm currently in Lima, Peru, but I will be moving back to Brazil in July, August this year. So obviously having a foot on the ground presence in Brazil will be a key element to help companies grow from the Brazilian market. So our intention is, as Dean mentioned, is really to help potential issuers and support our clients active in different markets. And Brazil is an important market for the TSX and the TSX-Venture. LATAM is the most important market also outside of Canada. We have 25% of the listed mining companies that come from Latin America. And Brazil is an important market, but it should be better represented on our markets, on the TSX and the TSX-Venture. We have 38 mining companies listed on TSX and TSXV with 95 mining properties. So we hope to see these numbers grow. And that's why it's a great opportunity, first of all, to have this session with 3 great companies and 3 great speakers that I will introduce in a minute. And also, if you stay tuned until the end, I think we'll have the opportunity with Pedro Paulo Dias Mesquita, the Secretary of Geology, Mining and Mineral Transformation at the Brazilian Ministry of Mines and Energy, to comment on some of the points that have been raised by Dean, with his excellent introduction. So stay tuned until the end. So I will start with presenting the three companies, the 3 speakers. We will have, after each presentation, a short Q&A session with each company. We might not be able to answer all your questions, but feel free to send your questions. And after the event, after the webinar, we can certainly get back to you on this. But the intention for today is for you to be more familiar with those 3 companies. So the 3 speakers are Patrick Panero. He's president and CEO at 4B Mining, the first speaker. Our second speaker will be Kaique Souza, Director of Finance and Corporate Development at Fides Mining. And the third speaker is Charles Chabri, President at Pillar Gold. So let me welcome first Patrick Panero, the President and CEO at 4B Mining. Patrick? Good morning, Patrick.
Hey, Guillaume.
Patrick, before you start, I wanted to say a few words about yourself and about 4B Mining, and then I'll let you go with your presentation, okay?
Okay.
Because you need the proper introduction. Patrick Panero is the co-founder, member of the board of directors and CEO of 4B Mining Corp, a producer of high-grade iron ore located in Western Brazil. Previously, he has been president and CEO of Rio Novo Gold, listed on the TSX, as well as managing director of MDU Resources Brazil, which had investments in the Brazilian electricity power sector. He is also a member of the board of directors of TBE, Brazil's largest privately held electric power transmission company. And Patrick Panero has an MBA in finance from Fordham University in New York and BA from the New School for Social Research. Few words about 4B Mining. 4B Mining is developing a pipeline of high-grade and high-quality iron ore and manganese assets and operations in Brazil. The Corumbá project is a past iron ore producer located in Corumbá, Mato Grosso do Sul, Brazil. So Patrick, over to you, and thank you very much for joining us today.
Thank you, Guillaume, and thanks, Carolina, Dean, and Fred, and thanks everybody for being here. Can everybody see the screen?
Yes.
Yes.
Okay. What I'll do is I'll talk a little bit about 4B Mining and then about this project that we found out in Western Brazil, our Corumbá project. 4B Mining is really 4 partners who got together and decided to develop different projects in Brazil in the mining sector. And we started almost immediately by focusing on iron ore, but on small scale iron ore. because of course everyone knows there are some very large companies here, and the smaller scale mines can provide some significant opportunities. So we started looking at that, and we started looking at manganese also, where there are a significant number of deposits sort of throughout the country, which we thought hadn't been developed to their full potential. One of the first things that we ran across about 2.5 years ago was this project in Corumbá. It had a series of unique characteristics. The first one being really that it was already an operating mine 15 years ago. And so it had a lot of the infrastructure, it had the open pit already open, and we thought it was something that you could get started very quickly. You could, you know, everybody talks about shovel ready, but this is really one case where shovel ready is a reality, and I think we'll show that as we go through the presentation. Alex, can you keep going, please? Okay, so some disclaimers there, and then I guess these are sort of the basics that some of which I already mentioned: consolidate iron ore, manganese, shovel ready. You know, it's very high grade ore. We're at 65, 67, and if we do a little bit more washing, we can get even better than that. So very comparatively with other ores in the world, we think we're sort of unique there too. This shovel ready thing is complemented by the fact that it's a surface layer, and so there's no drilling, no blasting, there's no overburden, and the cycle for actually producing is really simply ripping and hauling, crushing, screening, and washing, and you're done. So very simple, very low cost CapEx, and even very low cost OpEx in the mine. We have this deal with Glencore in place, a 5-year deal. They take 100% of our production, and they also are giving us a prepayment on 6 months of production. So that's been very helpful. We are fully funded. We will have our first shipment of ore probably sort of towards the end of May, going wherever, whether it's Europe or somewhere else. Yeah, but as I mentioned at the beginning, you know, we've been looking at a lot of projects, so we have a huge pipeline, and we even have some organic pipe potential inside the project, because there's a manganese deposit sort of below the surface deposit of the iron ore. ESG centric from the very beginning. One of the things that Fred, who is a partner in this group, insisted on is that we build the ESG structure around all of it, so that we could be ready for markets as soon as we could be, and that this not be left out as an item. Alex? Okay, so here you see a couple of images, and I think that the key thing is really this traditional iron ore and manganese mining district. We're right here on the Bolivia-Brazil border. There's a significant port facilities here, the city of Corumbá. What you see here, these footprints are an old Urucum manganese mine, which is owned by Vale, which has been mined for about 30 years and still has probably 20 years of deposits. There's a story going on there. The São Domingos Valley project, which used to be a Rio Tinto project, which Rio Tinto sold to Vale for $800 million back in 2009. The MMX project, which is today controlled by Vetorial on rental production and movement. So this all started back in the 40s. There was some sort of a chase for the manganese during the war years, and a Belgian company that came in here and started producing manganese to send to U.S. U.S. steelworks. Okay, so that's the key about the district, and of course, obviously, there's great personal knowledge by people here, because there's people who have worked for ValOre for the last 30 years, people who have worked for Victorial or for Rio Tinto. So skilled labor is not a problem. Now this project, we will probably produce about 600,000 tons this year. And we have an environmental license in place for 1.2 million tons. Got approval of the final exploration report and expect the mining concession to come through quickly. Now the smaller image down here is this same ridge that you see over here on the bigger picture. And what you can see is that there were iron ore open pit workings at the top of this hill, the top of this ridge, and production in the middle of the hill, and then some infrastructure facilities and stockpiles down at the bottom. And we've taken advantage of all of this. We've cleaned this all up. It was sort of abandoned. We've, as we'll see in a second, we've put this back into production. The port where we take the iron ore to is up here on Paraguay River. Right here, you can see it also, just next to the city of Corumbá. Okay, so when we looked at the project, we said what we have to do is surround ourselves with the best people from the mining industry to get it over the goal line. And so initially it had been Fred Marcus and Alex Panero who had introduced me to the project. I went out to the project, and then we brought in Paulo Gouveia. Later we brought in Roberto Gottschalk, who had been president of Vale International. Early wartime, I'm sure some of you know, was head of business development at TSX Global Mining. We have Felipe Alves, who is CEO of Frontier Minerals and former director of Equinox Gold. Wes Roberts, he's at Sigma Lithium Resources as head of the technical committee. And we have a lot of other people like Rafael Banki, who's going to be our ESG guru. He is the head of the largest ESG consultancy firm in Brazil. And he was formerly corporate affairs at Vale S.A. And then we have a lot of other people like Danilo Campos, who was director of logistics on rivers for Vale, and Ilario Centurion, who was director of procurement for Rio Tinto, and Kim Ross on the Paracatu mine. Last but not least, Carlos Nogueira, who had been Secretary of Mining with the Ministry of Mines in the past. So sort of a stellar cast of people who can get the project into production, and also a stellar cast of people who can be on board and act as strategic advisors to make sure that the company is always going in the right direction. Alex? Okay, so this is pilot test from just about 10 days ago. We started bringing the equipment in sort of second week of February, and had it up and running a few days after that. You can see here they're loading directly from the open pit into the crushers, and then there's some screening going on over here and some production of this dry product that we have to start with. But we're currently installing the wet screening and scrubber process farther downhill. So we make the dry product here, we remove the fines, and by removing the fines, we make any processing much more efficient. Okay, Alex? some more images of project implementation. You can see the plant and equipment getting to site, being trucked into site. You can see things like safety meeting at kickoff. Some of our investors at site maybe a couple of months before that. But what we do is we've brought in mobile equipment. It keeps our CapEx very low. It's leased equipment, so it becomes almost an OPEX to get your project started. So we're very excited about the speed with which we've been able to implement all of this. Alex. Okay, so just to understand, I had mentioned the port previously. From the mine to the plant, it's 3.5K, and then down to the road. Really, from the project to the port is 30K. So very simple. This port here at the northern Paraguay River is owned by this Norwegian company, Orchfeld. It's a family-held company. They have about 30 of these small, very high-tech, very high-standard ports sort of around the world. Extremely efficient. It's almost astounding when you walk into their ops to see such a world class, world scale thing being done sort of in the middle of nowhere. So the logistics part is we drop off here. The barges get loaded here and here, and the barging companies put together these 40,000 ton convoys, which move down to the port of Nueva Palmira here in Uruguay. And from here, we can send out 45,000 ton Panamax ships to European markets or others. Alex. Okay, so just our organic growth plan, 600K first year, 1.2 second year when we bring in the fixed plant, and we'll be up to 2.1 by last year. Keep going, Alex. And so I had mentioned that there were some upsides. There are these old manganese galleries from the days of the Belgians. We've started to sample this stuff. It's unbelievably high grade. The Urucu mines of Vale do 42% are in situ analysis in 48-53 range. So we're very excited about this. We're going to be drilling into the manganese through the iron ore layer, the alluvial iron ore layer. I think starting on the 16th of this month, and we should have results of that, which would get us a good resource for this entire area. As you can see, Vale did some significant production here, and so this is just an extension of an old Vale works, I guess. And we think we have about we'll produce about 3.5 million tons of manganese. And the thing about high-grade manganese is its potential battery grade. Manganese, to put manganese into battery grade, you have to take it up to HPMM, 99% manganese, but that's a question really of electricity and CapEx for the electrolytic processes. Let's keep going now. We're running out of time. Some overview of the market. 2016 was a low point. It's been pretty much steadily growing. So until the middle of last year, dropped and then started to grow back more recently. We're right now in the 150 range. Alex. Okay, so iron ore production, 2,200 tons a day, probably within the next 10 days. and the first lump iron ore shipment by mid-May. And we've got this QA/QC program going on to get us to a feasibility study level. That's underway, and the manganese drilling that I mentioned, all of this, of course, to try to get us to some kind of going public strategy in the second semester. I think I'd also mention that we've engaged KPMG to look at our to audit our financials. We should have that all in place, obviously, before any kind of going public strategy. So what have we got? We're in a world-class iron ore district, a manganese district too. We've got a project that's fully de-risked, fully funded, licensed, and we're already really in production. It's very high grade iron ore. We have this sales agreement with Glencore. We've got great infrastructure, and I think, you know, a really good team put together by everybody. Everybody, you know, brought somebody else in that we've discovered to be, you know, of the highest caliber possible. We think we have a pretty good story. It's not a giant iron ore project, but it is a nice mid-sized iron ore project that can make a lot of cash and become a platform for us to do the organic growth and then to do other projects throughout Brazil. I think that's about it, guys.
Thank you, Patrick. Very interesting presentation. We don't have much time for a lot of questions, but if I could just maybe summarize 2 points that I saw in your presentation, and then maybe you can respond in 2 or 3 minutes. So what would make 4B Mining unique? And can you further comment on the 2022 milestones that you're looking at? You mentioned that you're in the process of going public, but can you expand a bit more on those important milestones for 2022?
I'll take the important milestones first. The most important milestone was getting control of the asset. That was November of 21. And then the second milestone is staffing up and then getting plant and equipment on site. The milestone after that is actually producing. After that, actually sending product to the port and then getting it down the port to be then transferred to Glencore ownership. We get paid when we get to Uruguay, basically by Glencore, and then they take over the shipping end of the operation at that point. So those you know, the chain of things that has to happen, I think we have them very clear. We have to start producing, we have to start transporting to port, we have to start moving resources from port to barges, convoys have to go down the river. Those are the keys. Then the other key is the 43101 reports that are being written and executed right at this moment, which is the PFS for the iron ore and then the PEA for the manganese. Together, those things are significant milestones. I think the groundwork for that stuff will be done within the next 60 days. And then, you know, it's a question of the QPs putting all the information together and coherent package.
Super. Thank you very much, Patrick, for this interesting presentation. There was lots of material too, so we'll make sure to share with the audience. And if they have any questions, they can get back to you and your team, obviously. Thank you, Patrick. Have a great day. Thank you. So moving on to the second presentation, to Fides Mining. So we'll speak to Kaique Souza, who's Director Finance and Corporate Development at Fides Mining. Kaique, are you here? Just say a few words on Fides Mining before you start your presentation. So Fides Mining is a Brazilian mining company based in Matupá, Mato Grosso, dedicated to the exploration and processing of gold. It has more than 55,000 hectares of mining rights in the state of Mato Grosso, in a region considered one of the most promising in the world for deposits of basic materials. Currently, its main project is Mina União in operation since 2017. So Kaique, over to you for your presentation.
Well, first of all, I'd like to thank you, BCCC, for the opportunity of being here today. I've been many times. I've been here as been attending this programming, so it's quite an honor for us to be here. Well, Fides is a private Brazilian mining company that is focused both on exploration, development, and production of precious metals, especially gold, and the exploration and development of base metals projects, mainly copper. We currently own 100% of our three main assets. União Gold Mine is our flagship as an operational asset, where we produce 12 to 14,000 ounces of gold per year in a heap leach operation. The Teca Gold project is a high-grade, narrow vein underground mine, which holds up approximately 200,000 ounces of gold and an average grade of 23 grams per ton. And we also own 100% of Jaca project, which is a copper deposit that was discovered by Fides and Anglo America during a joint venture agreement that we held together between 2015 and 2020. Fides activities are currently focused on the north of Mato Grosso state in Alta Floresta Mineral Province. This specific region is within the boundaries of what we call here in Brazil the legal Amazon, although this is an area which is broadly anthropized and a major agricultural frontier right now. The region is supplied with excellent infrastructure, paved highways and local roads, power and water supply, and is increasingly available with the skilled workforce. There's also a few key infrastructure projects going on in the region right now, so that will contribute to the further expansion of the economic activity in the region, in that particular region. Well, our three main assets, they are located no more than 100 kilometers away from each other, suggesting a very strong consolidation potential and making it easier for us to develop a whole value generation strategy, not only developing them separately. During the last few years, we have also mustered a strong and very seasoned management team and operation team. We have now approximately 300 people on site working at Fides, living in the region. This gives us a more robust contact with the region and a more focused as a company in the particular area that we are currently working right now. So as our managing director, we have Lúcio Molinari, which have worked for over 30 years at Anglo American, and another 10 plus years at Nexa Resources. Both periods he worked extensively in the region as well. We have our exploration director, Roque Coelho, which has more than 25 years of Anglo American and was a key part during the joint venture agreement that we held with them. And well, he's been part of our team for almost 3 years now. It's important to state that all of our team, our mid-managerial team below, they are all on site. They are all living in the region, and this is it is a very strong characteristic of our approach as a producing and operational company. Well, as is widely known, Alta Floresta and Tapajós mineral provinces are two of the most prolific mineral exploration frontiers in the country right now, and they have been attracting a growing interest of several major and junior mining companies. As you can see, we are neighbored by a lot of other junior companies that are developing some remarkable projects there as well, doing some very interesting work. We have also Serabi Gold that is producing in Tapajós, and in the past few years we have seen increasingly increasing activity of major mining companies, Anglo, Nexa, and Codelco being only 3 of them. There are new developments that has brought other companies to the region as well. Well, União Mine is located in the southeastern part of our properties. This mine has produced in the last year 12,000 ounces and is due to produce this year 14,000 ounces of production of gold. Exclusively from our oxide reserves, the oxide part of our deposits. Those deposits are originated from epithermal high sulfidation mineralization that generated a number of ore bodies across the mine, as you can see in the presentation. That gives us a lot to work on in terms of exploration, but it also gives us a very, very prolific and very good potential cluster to continuously increase the resources of our mine. Now our last independent review, we have identified 441,000 ounces at 1.65 grams per ton, with another 600,000 ounces of potential resources indicated by the QP geologists that conducted this work with us. This potential that we identified is all in the red shaded areas. Those are areas where we do know the existence of deposits of ore. We do have some surface work on that, but we need to further drill it to characterize it accordingly to the standards of 43-101 resource statement reports. This will be the main focus of our drilling campaign. Our next drilling campaign is to secure this fast-growing mineral resource portfolio. Well, that potential for União gold mine has been recently upsized by the discovery of another epithermal system a few kilometers away from União cluster. Peru cluster, which you can see in this presentation, is our latest discovery, and it will surely contribute a lot to the significant addition of new resources to this project. An independent review conducted on top of our 2020 43-101 resource statement that we did back on December 2020 has presented this 541,000 ounces of resources and presented this more than 600,000 ounces of potential existing resources only in the areas that we are currently mining. And we do have some significant information to suggest that. As we advance with our project, our plan is to ensure the operational continuity of the mine through the construction of a CIL plant with a throughput capacity of 700,000 tons per year. That will lead to an annual production of 40,000 ounces per year at a all-in cost of a little less than $1,100 per ounce. Okay, this some of the work that we have been conducting. We have just finalized an internal feasibility study, and all things are in place, and we have already begun purchasing some of the equipment for this new plant. Well, Peteca Gold Project is in the northwestern part of our properties. It is in the so-called Flor da Serra district. This is a high-grade, narrow vein, therefore underground environment. Peteca Mine is in the middle of Peteca Mine in particular is in the middle of a 4.5 kilometer strike that is specially explored and has a strong potential to quickly add additional gold resources. Fides currently holds all the necessary mining and environmental license to start trial mining in Peteca right away. And we also have secured for over 5 years now the surface rights for the project, where we maintain administrative and operational facilities. Concomitantly with that strategy or that possibility, Fides has planned a 20,000 meter diamond drilling campaign for the next year to expand its resources and consolidate Peteca mine as a robust production cluster. As you can see here, we have Peteca mine that is densely drilled. We have Queiroz target, and we have as well João Fidelis target here that hasn't been drilled by us, but for some 15 years, it was one of the biggest artisanal mining pits in the region. So we are very confident. This whole region of Flor da Serra has been widely depleted in terms of oxide deposits by artisanal mining in the 90s and the years 2000. So the primary rock and the primary deposits, they are all but exposed, and identifying the continuity of the ore bodies of such narrow veins, it's an easy job for a geologist. But of course, we need the drilling, and we need that to continuously increase the resources of that project. Okay, so just a picture of a classic narrow vein taken out of the Peteca mine. We do have two galleries, two exploration galleries, two shafts going down 70 meters, only for the purposes of research and exploration. So you can see here our shafts, our structure, our infrastructure, our galleries. They are all in place and ready to start a more intensive drilling program, or even opening up the mine and starting production, since we have so high grades in that particular area. So at this point, Fides portfolio accounts for 739,000 ounces of gold between União and Flor da Serra. Our goal is to initiate drilling to rapidly expand those resources and therefore generate value and a strong platform for new operational assets. Fides has a very strong operational and production bias to his actions as a company. That was what have put us where we are right now. That is what have allowed us to generate and to discover and to develop all these assets that you have been seeing here. So we like very much to stay on that path and continuously generate cash and value to our shareholders and to our stakeholders as well. In order to achieve that, Fides has finalized an internal feasibility study for building this new CIL plan for $16.2 million. Another $5.1 million are also budgeted for a 32,000 meters diamond drilling campaign in União mine. In Flor da Serra, we have planned a $5.3 million drilling campaign for 20,000 meters of diamond drilling. Conceptual internal studies for a new 5 to 30,000 ounces CIL plant in Peteca. They have been made, and they indicate another $15 million demand for that. So this is our estimated capex. With, of course, with degrees of urgency and certainty regarding depending on the step of our studies. As for Fides Gold future, as mentioned before, our objective is to ensure the operational continuity of our project by building this new CIL plan. At the same time, we intend to push forward an aggressive drilling campaign to rapidly add mineral resources to our portfolio and therefore generate value for our shareholders. We believe that these next 18 months will be decisive for putting Fides in a strong position to a public listing that could increase the pace of our value generating strategy, or even be used as a sound exit strategy for any strategic partner that we could find at this point in time. Just a quick summary of our gold projects. And perhaps saving the best for last, Jaca project is a copper porphyry deposit that is owned 100% by Fides and will demand strong efforts to continue the exploration phase and later on the development of a project that, if taken into production, will certainly comprise of a huge operation and will definitely change the landscape of all of the region in terms of economic activity, in terms of social dynamics, and it is the most, in terms of base metals, it is the most developed project in the region right now, at least in Alta Floresta, for copper deposits. Fides is now assessing different strategies for Jaca. Most of them involve partnering up with bigger players in the market, and anyhow, we consider that to be a huge optionality for Fides investment thesis, and any perspective you might look into it. Okay.
Thank you, Kaique. We have time for a few questions, just to maybe to clarify, because it's quite impressive to see your different assets that you have. But do you see an opportunity to consolidate both the União and Peteca assets in a district scale strategy?
Yeah, absolutely. Actually, that is the idea of our strategy right now as a company. Since they are very close from each other, and since we do have some very complementary characteristics between the two assets, we have an open pit with grades of 1.6 to 2 grams per ton, and we have an underground environment with grades of higher than 23 grams per ton. So these characteristics in terms of value generation, in terms of business development for Fides, they constitute, we believe, in a very good opportunity for consolidate that in a whole district, and we can call it Fides União Flor da Serra district, and consider that a whole package to be developed at once.
Interesting. And my next question is regarding the Jakarta deposit, and feel free to go back to the Jakarta slide, but how does it play a role in your strategy to generate value in the near future, this Jakarta deposit project? Can you expand on this a bit? I think you had to go quite fast on the slide, but feel free to expand more on this, please.
Sure. Well, being ourselves a private company so far, and have been working with gold and small projects so far, we do understand that the size of this deposit and the size of this project, it's beyond our capacity right now. We do have the team, we do have the foot on the ground, we do have a very good understanding of the mineralization and the whole prospect for the region. We do own several mining tenements that could expand on that particular project, but we understand that any path that we go forward regarding Jakarta, we understand that this will be done in a way to generate value for the shareholders, and not being a gold production prospect. I think that this will constitute a huge optionality for anyone that would join Fides as a strategic partner.
Great. Thank you very much, Kaique, for this presentation, and the best of luck in realizing your key milestones, and hopefully seeing you in 2023 listed on the TSX-Ventures. Thank you, Kaique.
Thank you. Thank you very much.
Good. Moving on to our third and last company and last speaker for this session. So we have Charles Chabri, president at Pillar Gold. Charles, are you around? I saw you earlier. Great.
Yeah, yes, I am. Thanks, Guillaume, for this opportunity. Just give me a second here, and I'll attempt to share my screen.
You have enough time because I have a few words on you. I need to properly introduce yourself because you have an impressive 30 years of executive and directorship experience in the public market sector. So you've worked in a variety of senior executive roles with the following companies listed on TSX-Ventures exchange, including founder, CEO, president, and director of Castle Capital, founder, CEO, president, and chairman of Graphite One Resources, founder, chief, CEO, president, and chairman of Cedar Mountain Exploration, founder, CEO, chairman at Niblack Mineral Development, founder, CEO, chairman at Altiplano Minerals, founder, CEO, chairman at Vela Minerals, CEO and director for both Olympia Trust Company and Olympia Financial Group, CFO at Kivalik Energy Corp and Kamina Gold Corp. So you have an entrepreneurial flair, having founded and listed several companies. So it's a great introduction. And a few words on Pilar Gold. It is a Brazilian-focused gold producer. The company acquired the Pilar de Goiás project in April 2021, which includes 3 underground mines, a 40,000 ton per day modern processing facility, along with significant associated infrastructure, which has current annual production of approximately 40,000 ounces of gold. Pilar Gold has 2 additional mining operations with production planned to commence in the second half of 2022, along with significant exploration and development opportunities. With its existing portfolio of company, the company plans to grow production to above 200,000 ounces per annum by 2025 by way of organic development and regional consolidation strategies. So Charles, I think you have an opportunity to expand on this, talk about Pilar Gold, and over to you. Thank you, Charles.
Well, thanks for the introduction, Guillaume. That was a very Okay, so 2021 was a very busy year for Pilar Gold. Foremost on that was the acquisition in April of the Pilar Gold operation, which includes 3 underground mines, 2 of which are in current production, and an open pit development project. The resources have been updated. We're just in the final stages of completing the 43-101 on the Pilar assets. The resource has increased up to 4 million ounces from 3 million ounces. We've got 3 drill programs ongoing, so we look to add ounces there. Another big aspect of 2021 is we merged with a company called Fina Goldfields. Fina also has their assets located primarily in the state of Goiás, so good proximity to the Pilar assets. In Q4 of 2021, we also acquired Pocani Gold. It's in the state of Mato Grosso. It's a free dig operation, and we acquired that from Valterra Resources. And the most recent acquisition just closed this quarter is the Boto Tungsten mine, which is in northeastern Brazil. These are some of our targets for 2022. Our goal is to exit 2022 at an annualized production rate of 6,000 ounces per month. With that, we see a decrease in our all-in sustaining costs to less than $1,100 per ounce. A public listing, which we'll touch on a bit later in Q3 of this year, and the commissioning of the Boto Tungsten project. One of the opportunities that we see before us, especially on the gold side, is the favorable pricing of gold in Brazilian real. We're at near all-time highs as we speak. This map here shows where our primary assets are. Most of them are in the state of Goiás in south central Brazil. Our Pocani assets are in Mato Grosso, as I mentioned, and Boto is located up in that area. We have 4 production hubs. I will say that at this point in time, the one that is in production is our Pilar Gold facility. It's a 4,000 ton per day facility, very modern, and some smaller facilities, which we will be looking at bringing back on this year and next year. This was the acquisition from Equinox, $38 million in cash. 20.5 has been paid. We have vendor take back financing for 17.5, which is due at the end of 2023. Here's some of our management team. Jeremy Gray and Thomas Pappendahl are 2 of the founders. Jeremy's the CEO, Thomas is senior VP, very experienced mining people. Israel Olivier is our general manager for the Pilar facilities. Richard Crew is our country manager, and myself. At Pilar, we do take ESG very seriously, and it's a key focus. We're involved in various environmental programs, as you can see, and very closely communication and activity in the community. Our current share structure, just over 200 million shares, fully diluted to 217. We are doing a private placement right now, which will be closing off soon. And we expect that to be about $5 million. And that's the resultant share structure after this financing. We'd like to compare ourselves to a recent acquisition in the region. Hochschild acquired Amarillo Gold. We think that's a pretty fair comparison for ourselves. Similar market cap based on our current financing. These are our production rates and our forecasts for this year and in the coming years. Importantly, our EV resource for ounce of gold in the ground is $33 an ounce versus 83. Here we compare ourselves to some of the peers, Brazilian gold producers, and as you can see that on an EV ounce, we stack up very favorably. This is the backbone of Pilar Gold. It is our 4,000 ton per day metallurgical plant, CIP. There's been over $200 million invested in this project over the years. That includes obviously the plant, underground development, drilling, and equipping. Currently for Pilar, there's a 3.9 million ounce resource in place. The bulk of the resource is from 2 underground mines, Pilar itself. And you can see good representation by measured and indicated. And then Maria Lazara is a neighboring underground mine. It's about 6-7 kilometers away. Tres Barracas, I mentioned earlier, is an open pit project that we'll be looking at developing in the next 18-24 months. And Kyamar is the 3rd underground mine, and we're looking at bringing that back into production later this year. So one of the things since acquiring the Pilar assets in April of last year, we've been focused on drilling, both on an exploration side of things, but also a lot of development drilling. We've had very good success. Pilar underground itself has gone from 2.2 million ounces to 2.9 million ounces. From this underground mine, we produce on average about 3,000 tons per day. So it is about 75% of the throughput of our facility. We've been aggressively drilling a new zone called HG2, and we're seeing some really nice thick intercepts at a little bit higher grade, and that bodes well for future production. We'll be producing from these areas of the HG2 zone in the next coming months. Here's some drill highlights that we see from HG2, and you can see that there's some really nice intercepts and very consistent. Here's a picture depicting the Pilar Underground mine itself. The area in white has been developed and largely produced. As you can see, there's lots of room for expansion, and the resource itself is open in many directions. Off to the west, what we see is the outcrop extension of the Pilar deposit to an area we call Tres Barracas. And this is our open pit development project. Maria Lazara is the neighboring underground mine, about 6-7 kilometers away, and we truck ore from there to the Pilar facility. It's typically has a little higher grade than Pilar, but it's a very young mine itself. Lots of development drilling to do here as well as some exploration drilling. Here's just some parameters for Tres Barracas, our open pit development opportunity, approximately 6 kilometers from the plant. Lower grade, but very low cost operations we see from this deposit. It's a very good size, and we see this being a solid contributor to keeping the Pilar facility full. One of our strategies for growth is to increase the grade that we are producing at Pilar Gold. Currently, it averages about 1 gram per ton that goes through the facility, and just simply increasing the grade that goes through the facility, we'll see our production bumps. With the Fina Goldfields acquisition, we picked up some very key high-grade project areas. The one that we'll focus on for this discussion is Sertão. We have active drilling going on there and hitting some very nice high-grade numbers. So the strategy would be to produce ore from Sertão, high-grade ore, and truck it to Pilar. Just back of the napkin mathematics on it, if we can produce 500 tons a day out of Sertão at an average grade of 10 grams per ton, we'll more than double our production overall. We see these numbers as being very viable. Sertão itself is very famous, especially in Brazil. Troy Minerals produced from an open pit from 2003 to 2007, about 250,000 ounces. Incredibly, it averaged 29 grams per ton, and it was famous for being the lowest cost, highest grade open pit gold operation in the world during that time period. These are some of the highlights we've had from our early drilling. We started drilling with 1 rig in July of last year. In 2021, there was a total of 2,600 meters drilled. We're targeting over 10,000 meters for 2022. But as you can see, some really juicy intercepts. The widths are typically range from about 0.5 meter to 2+ meters. As you can see from these drill results, some very, very strong high-grade numbers. What's also good to see is they are very close to surface. Our strategy later this year will be to go underground and produce from these veins. We are planning on producing from this project area later in this year. So what's interesting with this project area is the potential size of it. From where the original workings were from the open pit, 2 kilometers off to the west, there's a high-grade intercept of 2 meters at 19 grams per ton on structure, and we believe to be the same continuous system. And we are currently doing development drilling on this structure to come up with an initial gold resource. We expect that to be at the probably early Q3 to have our maiden resource from this project area. I'll quickly touch on some other opportunities that we have as far as restart opportunities. I did mention Kyamar. It's about 40 kilometers away from Pilar Gold itself. Averages probably 3.5 grams per ton. And we're looking at bringing that back onto production later this year. Cascaville, I'll go to some slides on that. Okay, here we look at Kyamar Underground, which is currently being dewatered. Some geological interpretations of the system. Cascaville itself, we have a small gravity circuit there. What's interesting is that they have, it's a past producer, it's been on care and maintenance for the last, I believe, 4 years. Some very, very high grades, as you can see from the Maestri vein, average grade was 54 grams per ton. Recent panel sampling underground, 70 grams per ton. There'll need to be an investment of about $1 million to bring this back into production. This is very typified by fairly narrow high-grade veins. What's interesting, right below Cascaville, there's one single drill hole that had a significant silver deposit. This has never been followed up on. It'll be one of our priorities for this year, is to drill a few extra holes into it to see the size that we might be dealing with, but a very nice intercept of 17 meters at about 1,200 grams per ton. Quickly, in the neighboring state of Mato Grosso, we acquired the Pocani Gold facilities and mining tenements. It's currently on care and maintenance. We look at bringing this back in production in the second half of this year. It probably needs about $1 million of CapEx, just as far as maintenance and additional equipment required. These are some of the equipment that did come with it. There's a 30 ton per hour plant, easily expandable to 60 tons per hour. Some diggers and trucking. We see this as having the potential of contributing about 1,000 ounces per month when we do bring it back on. Lima is also in the state of Mato Grosso. It's not developed at this stage, but all the neighboring properties in the area enjoy a higher grade there, and we'll look at initial steps there, which will likely include some drilling. Most recently, we acquired the Boto high-grade tungsten mine in northeastern Brazil. Here it is on the map, very close to port. Mining history, it's been in production since the 1940s. And in fact, the US government was sourcing tungsten during World War II for military efforts. Access to grid power, water, paved highway, lots of previous investment. we'll be looking at strategies of bringing this on in the second half of this year. We understand it's not the perfect fit for a gold producing company. It was an acquisition that was very difficult to pass up. Geologically, it's a very large system, very high grade. Tungsten is a critical metal in that about 80%, and I think it's close to 90% of the world's production is from China and to a lesser extent, Russia. So having a supply outside of those jurisdictions is very strategic. A quick drilling update. So for HG2, we talked about that briefly. Planning, we did over 5,000 meters in 2021. We're currently preparing some of these areas to be mined in 2022. The beauty of this from the underground drilling, we're almost right on top of the ore, all permitting and everything is in place. So as soon as we access the ore, we can start producing it. Several areas of approximately 10 meters thickness in grades of 1.5 grams per ton. Here we see an ongoing drill program at Maria Lazara, the mine next door to Pilar. 2 surface diamond drills are being mobilized. They are on site and we are drilling now, so that needs to be updated. And there's all kinds of room for both development and exploration at Maria Lazara. So here is some exploration drilling that we're currently doing. There are 2 permits here, obviously a production permit where we're already in production, but there's also an exploration tenement, which we're doing the exploration work and look at converting that into a production license later this year or next year. Very nice grade intercept that we're using as a focal point, 3.7 meters at about 9 grams per ton. And that's kind of a very quick synopsis of where we're at with Pilar Gold. And our strategy is to look for listing in Q3 of this year. We currently, with 2021 being so busy with 4 acquisitions, we have a half a dozen Brazilian subsidiaries, which we're in the process of getting audits completed on each of them. We are largely finished with all updated 43-101 reports, so we're in a very good position for listing in Q3 of this year. I guess I can open it up for questioning.
Thank you very much, Charles. Very interesting presentation. We're almost out of time. Maybe we have time for a one minute question. You mentioned about your strategy and timeline to go public, but I was interested to hear about your plans for gold production in 2022-23. Where would you see the increased production come from?
Well, our strategy, as I outlined with our drilling at Sertão, we look at that being a contributor towards the end of the year. We're looking to have our first main resource there from the ongoing drilling that we're doing, probably in early Q3. So that's where we see a lot of our increased production coming from. But importantly, at Pilar itself, accessing the HG2 zone, which averages about 1.5 grams per ton over really nice intercepts of about 10 meters. That will be a big contributor, and that will displace lower grade stockpile ore that we do run through the facility currently to keep the production full, which is about 0.5 gram per ton. So any of that low grade ore that we can replace with higher grade ore, that'll definitely help with our production.
Super. Thank you very much, Charles, for your great presentation, for your time this morning. And we're back to the programming with Carolina, please, over to you. Thank you.
Thank you, Guillaume. Thank you, Charles, for the presentation. Thank you, Guillaume, for the moderation. I'd also like to thank then Kaique and Paula from Fides Mining, as well as Patrick, Alex, and Federico from 4B Mining for their time and for being able to present their companies here today. So next, I would like to introduce Neville Dastore, principal at Infor Financial Inc., one of our partners of today's conference, to speak on the global trends in capital markets and M&A in the mining sector. So Neville, thanks for being here. Over to you.
Thank you, Carolina, and I'm sharing my screen now. Hopefully everyone can see it. I'm Neville Dastoor. I'm a principal at Infor Financial, one of the co-hosts of the conference today. Thank you everyone for joining us. I'll be talking a bit about some of the trends we have seen of late in the global mining space and the M&A sector. But first, I'd like to provide a bit of an introduction as to who we are at Infor Financial. So Infor is a leading independent investment bank based in Toronto. We have not been around long. We were formed in 2015, but we are made up of bankers with decades of experience at various other firms on the street. And we cover the market broadly, as you can see here, from metals and mining, which is my focus, to financial services, healthcare, technology, and other sectors. And our core capabilities are around M&A and strategic advisory mandates, but we are small, nimble, and a creative group and can get involved with companies in various ways, with the ultimate goal being to serve our clients as well as possible using our team's collective knowledge, experience, and relationships. So a bit of a look at the work we've done at Infor over the past 7 years and our place in the market amongst our peers. Looking at independent dealers in the Canadian markets, we have ranked second since inception in the value of M&A advisory mandates we have worked on. We're very proud of this track record and our team, as it really speaks to the quality of our relationships and value our clients place on our advice. Now, some of the recent and larger metals and mining mandates we have advised on include Fortuna Silver's acquisition of Rox Gold last year for over $1 billion, and the listing of Li-Cycle, a battery recycling company, on the NYSE through a multi-billion-dollar SPAC transaction. These mining transactions, they go along with many non-mining transactions our firm has advised on, such as the $8.6 billion acquisition by Element Financial of GE's US and Mexican fleet operations, and many other transactions in various sectors. And here's a snapshot specifically of Infor mining team activity. As you can see, based on the number of transactions advised on, we've been the most active independent brokerage firm on the street over the past couple of years. And in terms of the value of the deals we have advised on, we're similarly near the top and well ahead of some of our much bigger peers. And here's a look at some of the mining transactions we've advised on over the past few years. I won't go through them, but would be happy to take questions on them at a later time. As mentioned, our senior team has decades of experience on the street. Jens Mayer and I, having come from Canaccord, and Henrik Sylvester, having come from GMP, we've all been actively involved in the mining sector and mining companies from microcap up to the majors over the past 3 decades. And you'll see here names of some of the companies our team has worked extensively with over the years, including a number of names with Brazil exposure, including Kinross, Mantle, and Dean Wheaton Precious Metals. So now, turning to some market commentary. Market volatility has been a persistent force, as we all know, for many years now. And we've been reminded of the impact of global unrest on financial markets over the past few weeks. In the Canadian market specifically, we're seeing an accelerating shift in market focus, whether it be from cannabis to tech or crypto to psychedelics. But two constants we have seen globally are loose monetary policy fueling inflation and ongoing shifts to a greener world. And you see the results of these two constants in the headlines here. Now, the accommodative monetary policy and resulting inflation reminds us of why gold is seen as a safe haven. We saw gold perform extremely well during the inflationary cycle of the late 70s and 80s and see somewhat similar forces lining up to fuel the current leg up in the gold price. As such, we think precious metals will continue to perform well and believe it should remain an important part of everyone's portfolio. Now, at the same time, the push for greener technology to drive global growth is spurring on investment in base and diversified metals such as copper, lithium, PGMs, nickel, cobalt, and other metals. And for these reasons, we see a very supportive market for metals, commodity prices, and mining equities in particular for the foreseeable future. Now, let's take a look at what this means for the Canadian mining M&A environment. Now, we've seen a significant increase in mining and M&A activity over the past 10 years. And apart from a broader COVID-related market slowdown in 2020, the past 3 years have been recent record levels of activity. So what's driving this increase and where is it going to go? Well, we see M&A in 2021 being dominated by large transactions, with 4 out of 171 transactions, that's 2%, accounting for almost 2/3 or 66% of the value of transactions. Now, this is consistent with what we saw in other recent years with transactions from Barrick and Randgold, Newmont and Goldcorp really dominating the market. And in our view, what we're seeing is a realization that scale matters. And this is true in every segment of the market, from the micro caps to the seniors, in order to compete not only for growth assets, but almost more importantly for investor dollars. We're seeing a need to get bigger amongst your peer group. And often this means growing through mergers. Now, what does this say about the junior and intermediate mining companies that make up the other 90% of the transactions last year? Well, we see the same need for growth playing out in the junior and intermediate space. And you'll see that with some of the stories presenting today, like TriStar, G Mining, Fides, Pilar, where first and foremost, the focus is on operational excellence and advancing their key projects. But ultimately, growth and scale are going to drive market interest in the stories and will drive M&A activity as companies continue to look for acquisition opportunities to fuel this growth. So looking at the Canadian mining equity finance market, we also see growth in recent years relative to the past 10 years, with approximately 350 financings plus, raising over $7 billion in 2021. Now, an interesting trend here that Dean McPherson from the TSX earlier spoke about as well is the breakdown of financings between precious metals and diversified and base metals. Over the past few years, we're starting to see that second market constant of a move toward a greener economy, pushing what's typically a very gold heavy market more toward diversified and base metals. Now, this in part is driven by the broader market forces we discussed, resulting in an expectation for higher commodity prices. but it also is driven by the M&A activity we highlighted on the previous slide, bringing speculative investors into the market looking to find the next takeout target. So M&A activity also forces the recycling of capital in the market, some of which inevitably finds its way back into the mining equity market. So we see all this driving a catalyst-rich cycle, where not only will there be the macro drivers in the commodity markets, but there will be greater news flow from companies that are cashed up and generating results, whether it be exploration results or development and production news on more advanced projects. And this will ultimately, in our view, continue the cycle of corporate growth as scale becomes increasingly important to compete. Now, interestingly, one of the bigger threats we have seen to the mining equity market over the past decade is the emergence of the ETF business. Now, here we are looking at gold ETFs and see that from 2013 to 2022, we have approximately a doubling of gold ounces held in these ETFs. Now, this level of growth equates to ETFs buying, on average, approximately 5% of annual global gold production each year over the past decade. Now, as constructive as this is for the overall gold demand fundamentals, it has made it more difficult for junior companies to raise equity capital to advance their projects. As such, we've also seen a broadening of junior mining funding mechanisms beyond the traditional equity markets and toward strategic investors, including both PE firms and other producers, as well as more creative mechanisms, including royalty and advanced royalty sales. Now here we see an illustration breaking down ETF buying by region, with most ETF holdings in North America and Europe. We also show here the breakdown of the North American ETFs, with the Spider Gold Shares and the iShares Gold Trust accounting for the vast majority of gold ETF investing. Now, what we have to keep in mind, though, is what these vehicles don't provide, of course, is the leverage we often look for when investing in mining equities. And that is something we look to the quality management teams we're hearing from today to deliver on. So what does all this mean for mining in Brazil and our presenters today? Well, we all know Brazil as one of the most mineral-rich and prolific mining jurisdictions globally. It typically ranks as one of the top 10 global producers of iron ore, lithium, tin, and nickel, as well as one of the top producers of copper, zinc, gold, and bauxite. Along with this rich history of mining, we also see it as one of the premier regions for mining growth and investment, with over $36 billion expected to be invested in the sector in the coming couple of years. So all this, in our view, bodes well for the future of the Brazilian mining industry and our presenters here today. With a relatively favorable political and taxation backdrop, a substantial inflow of foreign investment, a rich history of mining that comes along with a highly skilled local labor force, and a relatively underexplored mineral potential, we see Brazil as one of the premier mining growth regions globally. And that concludes my presentation today. I'm happy to take questions either now or later from participants. So Carolina, I will turn things back over to you.
Thank you, Neville, for the presentation and for the partnership in putting this event together. The numbers are very impressive, so we're very excited for the years to come in the development of the Brazilian mining sector. So next, I would like to invite Deborah Honig, President at Adelaide Capital, who will moderate our next panel with the Canadian public mining companies operating in Brazil. So we have here today ValOre Metals Corp, Sigma Lithium, G Mining, and TriStar. So after the presentation, Deborah, we will host a Q&A session with the speakers. So please don't be shy. If you have any questions, please add to the Q&A box on the bottom of your screen. Without further ado, Deborah, over to you.
Thank you, Carolina. Appreciate the intro. So I'm Deborah Honig from Adelaide Capital. Adelaide Capital is a full-service IR and social media group based out of Toronto. We've been around for about 5 years, and we're a group of former sell-side salespeople, analysts, etc. Enough about me. We're really here to talk about some exciting public Brazilian companies. The first that we'll be presenting in this track is ValOre Metals. I believe we have Jim Patterson, CEO and Chairman, with us. Jim, are you able to turn on your camera, your mic?
Hi, this is Colin Smith. I'm VPX for ValOre.
Oh, hi, Colin.
Jim is in an airport and having a hard time with the internet there. So if he joins us, great. But if not, I can take the reins for now.
Perfect, great. Just while he gets started, ValOre trades on the TSX-V under the ticker VO, and they are advancing the Pedro Branca Platinum Group element and gold property in Northeastern Brazil. Colin, why don't you tell us a little bit about what you're doing at ValOre?
Yeah, so we're an exploration company based out of Vancouver, British Columbia. And as you said, we have the Pedro Branca PGE project in Ceará State, Brazil. We also have a number of Canadian assets in which we're actively exploring, but Pedro Branca has really been the main focus of the company for the last few years. And well, let's get into it before I get on a ramble about stuff we'll talk about soon. So forward-looking statements, you can read these at your discretion. And before getting into the specifics of the projects in the company, just tell you a little bit about the Discovery Group. ValOre is a part of the Discovery Group, and it's essentially an alliance of 9 publicly listed companies, which range from project generator, early exploration stage, right up to developing a mine in Guatemala with Bluestone. Some of these names may be familiar to you. Great Bear Resources was a great story for us. They just got taken up by Kinross for 1.8 billion. And then there's, it's commodity agnostic. So, porphyry copper projects, oxide gold. We're obviously focusing on PGEs in Brazil and uranium in Canada. So it gives us a really diverse set of expertise and also a great ability to raise capital and deploy it effectively at projects. So here's just a summary of the current capital structure and team, sitting at a market cap at around 70 million. And you can see the share structure there. The insider ownership is quite strong, so over 20%. This company's been around for 13 years. It used to be named Kivallic Energy, and we've since kind of changed names and changed directions since then. But strong insider ownership. We're led by a very experienced team of technical minds and also folks who've had a lot of experience in M&As and transactions recently in the market. So you can see some of those included on the right there. Northern Empire was a gold project in Nevada, taken out by Coeur. Kaminak, which ValOre was spun out of Kaminak. Kaminak was acquired by Goldcorp for $500 million for the Calfee gold project in Yukon. Then a number of other excellent transactions. So we have that arrow in our quiver, so to speak, and we're quite versed in good exits that give a lot of value to our shareholders. So this is the current asset portfolio for ValOre Metals. The 2 core assets that you see in the larger yellow stars are the Angelac uranium project in Nunavut. We're going to be actively exploring that this summer. And of course, the Pedro Branca PGE project in northeastern Brazil. We also have a district scale gold project on Baffin Island, northern Canada, and then 2 additional uranium projects in the Athabasca Basin of Saskatchewan. So much like Angelac, Pedro Branca, they're both large land positions, district scale. They both have inferred NI 43-101 compliant resources. There's significant historical expenditure. In the case of Pedro Branca, over $35 million US was spent by majors such as Anglo American Platinum, had the project for about 11 years. And since acquiring the project, we've spent a little over 4.6 million and that's mostly been supporting over 17,000 meters of drilling. And we're actually working on a re-estimation of the resource as we speak for release this month. So that's very exciting for us. And if anybody would like more information about our Angelac project, please reach out to me or the contact at the end of this deck anytime. So we're really lucky to be working with excellent Brazilian technical minds and excellent geologists, excellent field technicians, which we were able to pull this team together right at the onset of COVID. So it was sort of very fortuitous timing. We were starting our first drill program and we were able to pull together this really quality team. Much of these guys have worked together in projects before, so there's excellent sort of team atmosphere within the group, but also just a real passion and hunger for discovery. And you know, I'm certainly feel blessed and fortunate to work with all of these guys. And you know, for example, Antonio Mota there, he's been with the project since inception, so since the mid 80s, and he's just an encyclopedia of knowledge and incredible respect in the community. And you know, that's something we've been really fortunate to have, as well as a really positive relationship with the village of Capitão Mor, which is a small village we base our operations out of, and Antonio Mota is a huge part of that, of course. And this is the team here. So Antonio being the big smile on the left. The team is led by Tiago Diniz here, and a good portion of the gentlemen and ladies that you see in this photo, they're from locals from Capitão Mor. So it's been a really positive story of bringing people into the group, training them. And actually a lot of these are leading crews now. They're leading Trado crews or geochemical crews in the field. And you know, it's just been great to see that evolution, and the quality work that's coming out of site as well is phenomenal. So Northeastern Brazil, this gives you a little perspective of what the field area is like. It's actually, you know, for me as a Canadian going to Brazil for the first time in 2019 for this project, I was surprised at how arid it was in this part of Brazil. So a lot of caatinga and spiny, you know, thorny bushes in the field and very dusty. So access is great most months of the year. And you know, because of all the former investment in the project, there's excellent infrastructure in place. There's a great core logging facility and core storage. There's electricity, internet access throughout the project area. You actually take, you know, one of two paved highways straight from Fortaleza to the project and or through the project. So it's really, in comparison to somewhere like Nunavut, where we're preparing to explore this summer, it's very explorable and straightforward on that sense, of course. So this is where it is. Fortaleza being the city we fly into here. As I said, you have this choice of two highways to take you right through the project area. BR20 actually carries right on through to Brasilia. And Fortaleza is a beautiful city right on the beach of 3 million people. It's got an excellent airport, two different deep water ports actually. And as I said, we drive from Fortaleza to Capitão Mor, and this is the beautiful village of Capitão Mor, which we make their base of our operations. And as I said, it's arid. Agriculturally, as most of the folks on this call probably know, it's very developed. So there's no real issues environmentally. And because of the good relationship that not only Antonio, but all the previous operators have fostered with Capitão Mor, there's a lot of very strong support in the community for the project. It's been a source of employment for the town for decades, and will continue to be so in the years to come. So here's the land position on the left. It's sort of staked around this light green shaded area, which is the prospective PGE belt. It's called the Troy unit. It's a Archean mafic to ultramafic belt that hosts these PGE deposits, sort of layered mafic or zoned mafic to mafic ultramafic intrusions. We can get into the geology of that in a little bit. The first thing we did was calculate a maiden 43-101 resource, which came out to a little over 1 million ounces, 2 PGE plus gold. It's about a 2-to-1 palladium to platinum ratio. And it's just a straight summation. There's no equivalence here. It's grams per ton palladium plus platinum plus gold. So we've really been focusing on expanding that resource in the past couple of years. We've drilled over 17,000 meters. And we've also really dusted off a couple old Trados, which have never been used in this project before, but we've been using them and they've been excellent at finding new targets, actually refining in progress drill programs and also advancing targets to drill ready stage. So this is the general geology here. As I said before, the Troy unit is sort of this folded belt that sort of wraps around here. The yellow stars denote the location of the 5 NI 4311 compliant deposit areas. So 3 of them being within sort of a 5-kilometer radius of each other, the northernmost Santa Maura and the southernmost Trapia. The northern and southernmost are where we've been doing most of our drilling the past couple of years. And this gives you an idea of the style of mineralization. So the high grade sort of reef material, which you get up to hundreds of grams per ton, 2 PGE plus gold. And then the slightly more bulk tonnage ultramafic package where you get these big olivines, and then interstitial to those cumulate phases, you get this high grade mineralization. You can see those little black dots. Those are the chromite crystals, and that's what carries the PGEs. So these reef horizons can be up to 8 meters in thickness, but typically we see them on the meter scale. And then the actual intrusions themselves can be anywhere from tens of meters in thickness to 150, 160 meters. And they come right to surface, which is excellent. So these are all open pit style targets. This gives you a little summary of the historical work. So a number of operators over the years, Anglo probably, in part of the biggest contribution in terms of historical spend and data to the project. And so we're really putting that to work. They were looking for massive scale, and speaking with some of their former employees, their internal benchmark for what they deemed an Anglo project at that time was about 15 million ounces. So they were looking for something that would significantly offset ounces coming out of the Bushveld at that time for their company, then at those metal prices. So what it did is it left us with a very underutilized, extensive database of high quality data that it wasn't necessarily put all together. It was sort of kept in silos between the different companies and different operators. And so we're, the first year of this project was really focused on bringing that data to a workable state, and since then putting it to work. So here's a summary of what we've been up to the past couple of years. As you can see, and as I said before, most of this has been drilling. And I'm looking at the time, I should probably hustle up a bit here, but it gives you an idea. Working in Brazil is very cost effective, and we've been able to put the 4.6 to great use. This is the Esparro deposit, so one of the 5 central. Just the main point here is the at-surface mineralization. So we drilled this for resource continuity and metallurgical sample material last year. And all these intervals are from surface, you can see, including this one, which was 77 meters of just shy of 3 grams from surface. So very compelling grades. And among that interval in Esparro was, Esparro was 8 meters of 17 grams per ton. So you're getting underground style mineralization within the top 30 meters or 60 meters from surface. So for an open pit, that's exciting. Now the resource upside that we've been drilling off is communicated here. So these are 3 areas, Trapia being the southernmost deposit area, Santa Maura being the north. And what you're seeing within these black dashed lines, those are the pre-ValOre holes, which constitute the 2019 resource. And what you're seeing outside of those areas, those are holes in which we've drilled, we've hit, and those will obviously be considered in the next ongoing resource re-estimation. They're coded by gram meter, so simply put, the bigger the dot, the redder the dot, the better the hole. And you can see, the scale bar is the same in all these maps. There's a lot of great upside outside of the current resource holes. Now, I know we're down to our final minute here, and we had lofty goals with a 20-some slide deck here, but the Trado is something we've really been putting to work. It's a simple tool, it's easy to use, and we've been using it not only to discover new targets, but like I said, refine drill programs as we go along. It's really been effective. Please visit our website to see some of the news releases. We also have a video that can explain that methodology a bit to you. And this was a target that was the Trado was instrumental in. And so what you're seeing here, the Trado holes are in green triangles, and that just denotes the thickness of ultramafics we intercepted in the Trado. We followed up good Trado results with some trenches, and then we followed up good trenches with some drilling. And so this is a deposit area or target that was not in the resource in 2019, which we expect to see in the resource in 2022. Similar story. This is target in the far north, just due south of the Santo Amaro deposit. So this is, again, a Trado refined target that was historically worked, but we really reimagined it and sort of reinterpreted it and had some great results with the drill bit, 32 meters of 1.65 grams per ton from surface. And you can see the Trado that was right up dip of it, 10 meters of 1.64 grams from surface. So it really shows that the tool is working. Excuse the meowing kitten in the background. We just got a cat yesterday, so it wants to be involved. As they said, metallurgy ongoing. I know I'm running short of time here, so I might just slip through this, but we have a test work program ongoing at ALS Kamloops that's working towards hopefully a PEA later this year. And as I said before, a big part of our work in Capitão Mor is working with the community. So we've started a number of exciting things like literacy programs for teach English, driver's license programs, and the people in the community are so lovely. And I haven't been able to go there since COVID started, and I'm itching to get back and see everybody again. But it's just great to see their support with the project and their participation in some of these programs that we're putting together in the community. So I think a couple of folks have actually got their driver's license now, which is really exciting for us, and more of those programs are on the go. So excuse the quick slides at the end there, but the catalyst for growth this year in the short term, this month, as I said, we'll be releasing a recalculated, re-estimated 43-101 resource, and that includes obviously everything that was included in the 2019 resource, but the 17,000 meters of more drilling additional drilling we've done since then. The metallurgy will be working towards a PEA later this year, hopefully. That's the plan. And as we speak, we have 2 Trados spinning at the project, looking at some of the new ground that we picked up in the A&M bid last year. And we just finished a big solar campaign in one of those new blocks we picked up. And so the exploration does not stop, but right now we're really focused on getting that resource to market this quarter, and also preparing for exploration and none of it as well. So I'll send it back to you, Deborah.
Right. Thank you so much for the overview. I think we have 2 minutes for questions. So I had one question about the upcoming resource update. It looks like you did a lot of step out drilling since the last resource update. How much can we expect in inferred versus indicated?
It's a good question. I mean, if you look at some of the historical JORC resources, for example, a good portion of those resources were indicated. Some were actually measured as well. We could absolutely convert a lot of our resources to both of those categories at this point. But I think for the purposes of this resource, we're just going to keep everything in inferred. It's like I said, we have the opportunity to convert and upgrade the resource at any time for the PEA, for example. But I think just to keep things simple for now, we'll keep things in inferred.
Okay. And how much of that was focused on growing existing deposits versus finding new targets and new potential deposits? Has that been an objective?
I'd say on average between 2020 and 2021, I'd say probably 2/3 of the meterage was focused on expanding the known resources. With that said, we really, in some of the deposit areas like Trapia 1 is a great example where the southernmost margin of that deposit area was truncated by a hole drilled by Anglo in 2005, I believe it was, which seemed to cut off the deposit. Through the relogging of the core and reinterpretation of the geology there, we actually had a theory that it wasn't cut off, it was just down step. So we really were able to step out, twin that hole, push it to depth, and we did actually hit, and totally wide, blew open the potential to the south there. So yeah, to answer your question, about 2/3, but the Trado, both Trados are working to find new targets as we speak, and then there's a bit more focus on new discovery and target advancement in 2020, and so 2021 we really chased the good results we had at Trapia 1 and Santo Amaro, and those will be on the resource this year for sure.
Makes sense. Trado's a concept that's fairly new to me. I haven't done a lot of work in Brazil in the past. But the reconciliation seems really good. Is that normal, or is there something that you're doing that's making that reconciliation like better than average?
The thing I will say is that we don't just go to the field and start drilling holes with the Trado, that we precede it with a thorough look at the historical database and then thorough detailed geological mapping and prospecting. And from that, we then plan our Trado drill grid. So we follow up our good mapping points and our good structural data with the Trado. And so, you know, if you were just to go straight in with the Trado, you would probably drill a lot of dusters and not have a whole lot of success. But we precede it with good boots on the ground geology, and then, you know, quality sampling. So we sample every meter down hole. At Pedra Branca, the cover is typically quite shallow, so most of our holes are sort of 3 to 5 meters in depth. We have drilled a hole as deep as 16 meters in depth. So as you do that, you sample each run. So every meter is sampled, is sent for geochemical assay. And so it's great because not only do you get a really comprehensive, deep geochemical sample, but you also get real-time lithological perspective into geology undercover. So when I said before, we use it during a drill program, if we have a good hit at surface in a certain hole and then we lose that in the mapping data to the south, for example, we can follow that up the next day with the Trado and actually trace where that ultramafic package is going and then follow it up with the drill bit.
Interesting. Well, it must provide a lot of cost saving.
Yeah, I mean, it's basically a lawnmower engine mounted on top of a steel frame, and it's a Honda 4-stroke, so parts are easy to get and it's easy to fix, and maintenance is pretty straightforward. So we love it, and I know it's widely used in Brazil. It's a tool that's fairly new to me as a Canadian, but it's been outstanding for us at the project.
Cool. Well, I really appreciate your time, Colin. Thanks for giving us a bit of an overview.
Thank you very much, Deborah. Yeah, anytime.
I think now we're going to switch up the order a little bit. So next up, we're going to have Louis-Pierre Signac, CEO at G Mining, presenting. So G Mining's flagship asset is the Tungsten gold project in Paris State in northern Brazil, which I believe is recently acquired from Eldorado, which is permitted for construction. So looking forward to hearing more about that. G Mining is listed on the Venture Exchange under the ticker GMIN. Is Louis-Pierre available?
Yes, can you hear me?
Yes, I can hear you and see you. Nice to meet you.
Thanks for the introduction. Obviously, as you mentioned, we just acquired the Tungsten project from Eldorado last October. Obviously, with that acquisition, we've done a complete re-update of the feasibility study, which was led by G Mining Services, which is an engineering and construction management firm based in Montreal, with which we have a master services agreement. So really, that's setting the stage for us for the next steps for the project, which is to be looking to start construction in the second half of this year. Just to give you a bit of background, G Mining Ventures is newly created, but G Mining Services, with which we have a relationship, has been around for 15 years, and they've constructed many gold mines for third parties, including Lundin Gold, Newmont, and IM Gold. So over this time span, we've executed on over $2 billion of projects and have completed our projects on time and on budget, which is in the context of the current market, a key ingredient for success going forward. So with the update of the feasibility study, which was released essentially 3 weeks ago, we are looking to put in place our project financing in order to really make a full construction decision for the second half of this year. That process is going well, and with the current context of the gold market, we do expect to be putting that in place in time to start full construction. Also, we have initiated a drilling program on the property. This is something that was kicked off in January, and we do see a lot of potential with this project, given that this was largely put on standby or care and maintenance by Eldorado in the past. The last drill holes going into the property were essentially in 2015. So we do see a lot of upside that we're looking to expand and include to what we currently know from the feasibility study. So Mining Ventures really has, all the key ingredients for a development company. We do feel that we're uniquely positioned, starting with the great asset of Tungsten, with over 2 million ounces of reserves. It is very advanced in terms of permitting. We do have 6 installation licenses on the project, which gives us a clear path towards construction. We do have a very strong cash balance, just over 58 million US at year end. So that gives us lots of runway in front of us to expend and spend on the project until our financing process is completed. With the team that's backing us through Mining Services, they've executed on over four mine builds in South America, a lot of which have a lot of similarities to the Tungsten project that we have. Eldorado, having sold the project to us, is very keen on supporting us. They do maintain a 19.9% shareholding in Mining Ventures, and they are very supportive of us going forward on the project. So the feasibility study that we've updated here, this shows a bit of some of the highlights. It really consists of a simple operation. We'll have one large open pit feeding a conventional flow sheet at just under 13,000 tons per day. We've updated the economics for the project using $1,600 gold price, which is essentially a long-term price used by many development stage companies. Obviously with upside, given the current context of the spot price. So the feasibility study shows an NPV of $622 million and a rate of return of 24%. And this requires an initial capex of $458 million to build the mine. In total, we'll generate a 10.5-year mine life with the current reserve, which will give us an average annual production of 175,000 ounces a year. So something that's very significant and of meaningful scale. The project is located in the state of Pará, which has a lot of similarities to some of the prior projects that we've done in South America, especially in the Guyana Shield, with Marion, for example, in Suriname. So similar rainfall, tropical environment. So something that we're very used to dealing with and know how to deal with that properly. The state of Pará is really a supportive state for mining. They have a lot of supportive policies, the most important of which is a 75% reduction in corporate income taxes. So that obviously does benefit the returns on the project. We will be connecting the project to the Brazilian power grid. For us, that's really an important feature. Gives us access to a clean, renewable source of power for the project. And so you'll see we'll be putting that power line in place, which will essentially provide infrastructure into the region as well. The project where it's located, we don't have any resettlement or relocation requirements in order to start construction. So that's a very favorable situation for us to advance quickly on the project. Also, we don't have any indigenous communities around the project that can be impacted by mining activity. We do have the main installation licenses for the project. These were received by Eldorado back in 2017. They were put into a state of suspension, given that they weren't committing to building the project at the time. So what we've done is reinstated them at the end of 2021, and we're in the process of requesting a 2-year extension in validity for the project to fit with our construction schedule. With the project, we do show some of the sensitivities that we have for a spot price and upside case. So what's really interesting is that we're able to generate a payback that's just under 3 years. And using our base case assumptions, we generate very strong free cash flow of about $100 million a year with the project. As part of our feasibility study update, we really went out and redesigned the full project. We've updated reserves for $1,400 gold. And so that's what's allowing us to show essentially a 200,000 ounce increase in reserves compared to what Eldorado had in the past. And as part of this update, we really look to, Brazilian suppliers to feed into our CapEx update. There's really a very large manufacturing base in Brazil, and we wanted to make sure we benefited from what can be offered in country, given that that'll really simplify our logistics and supply chain issues going forward if we can source within country itself. This shows the ore body that we have. It's essentially a very large, massive ore body. It consists of a granite intrusion. So we have 2.1 million ounces in the resource category in the M&I, and essentially this all converts to reserves at $1,400 gold. So with a reserve of just over 2 million ounces. So we get essentially a 97% conversion in terms of our resource to reserve. And as you'll see, this is a deposit that has been well drilled off. Over 40% is in the measured category, so very high level of confidence in the resource itself. As you can see, though, the deposit's drilled down to about 350 meters. We do feel that there's lots of exploration potential at depth to keep growing this pit, given that we have a very reasonable strip ratio of just at 3.4 life of mine. This shows the gold production profile that we expect over the life of mine. For the first 5 years, we'll be able to generate just under 200,000 ounces of gold a year. And this would make this essentially the third largest gold mine in Brazil. So something that's very significant and meaningful scale. This, in terms of our mining operation, we will be going with an owner mining approach using 100-ton class trucks and excavators. We'll be mining a 10-meter bench, which will give us some economies of scale there, and really that's really suitable for the massive style of ore body that we have. So the mine plan will be mining at just over 25 million tons a year in order to feed the mill to 4.7 million tons per annum or 13,000 tons per day. The process is really conventional. We have a two-stage flotation that flows into a CIL circuit. And overall life of mine, we expect to recover 90% of the gold. And as you can see, 94% of our feed material consists of a granite, which is the main ore type we have. With this asset, given the grade that we have and the low strip ratio, the fact that we're connecting to the grid and having reasonable cost of power, we're able to position this asset really in the bottom quartile of the gold producers out there. So at just over $681 per ounce, all in sustaining. And as you can see, we would be positioned as the third largest gold mine in Brazil under Paraquet 2 and AGA Mineral that's operated by Anglo Gold Ashanti. The project really does benefit from a good infrastructure at this point. During the exploration programs that were done in the past, there was no road access into the site. So that was very limiting during that period of time. But since then, Eldorado constructed the access road into the site, which gives us access into the paved highway BR 163 that goes north-south on the west side of the state of Pará. So we essentially have are able to bring equipment and people into the project site right now, which will allow us to get into construction fairly quickly. We do have an airstrip on site and an exploration camp that can host about 90 people right now. And we'll be expanding that as we start construction, and eventually we'll have a full camp on site that we'll be able to have up to 1,200 people on site during the peak of construction. The main power line that we'll be constructing will go from the site and go along the highway connecting into Novo Progresso to the south. So that'll be a lengthy line of 190 kilometers, but about half of which will be along the highway. So very simple to construct. This shows the open pit and some of the hits we have at depth. So this is really an attraction for us to keep growing this resource and reserve over time. So we've started some drilling. We poked some holes now below the pit and have signs that the mineralization does continue. So we'll be able to report to our investors in the coming months on some of these results. And this is obviously to show the upside potential to the current deposit. And beyond that, we do have a very large land package, 688 square kilometers, which we consider to be just under 5% drill tested at this point. So something that really could be suitable ground to finding additional deposits and extending mine life in the future. As you can see, the Tungsten project is really in a significant mineralized trend, referred to as the Tungsten trend. We do have other explorers in the region with Cabral, which is 20 kilometers to the northwest of our property. And we do have Sarabi, which is mining underground to the southeast of us. So very prospective ground for additional deposits. So at this point, we're really entering the main value creation phase, which we consider to be the construction and getting the mine into operations. That's really a critical time in the life cycle of a project, and is really one where we'll be exploiting our main competencies in terms of mine building capacity that we have in the company. We do have a very strong shareholder base. Eldorado, as I said, at 19.9 as a strategic investor. We have management and board just under 12%, and many institutions totaling just under 57% of our market cap. Currently, we have 58 million of cash. We do have in-the-money warrants that'll come due in May. All this is essentially part of our cash that'll be going towards the project as part of the full financing package. Currently, we really do see a lot of re-rate in our stock, given our PNAV multiples that are below some of our peers. And obviously, as we get this into construction and operations, we would graduate to a producer group, which typically benefits from higher PNAV multiples and additional value creation at that point by further de-risking the project. In terms of our valuation, in terms of enterprise value per resource ounce or reserve ounce, we do feel that we're well positioned as well for re-rate over time. This is given the existing reserve without the current drilling and potential that we're advancing right now on. As part of our ESG framework, what's going to be really critical for us going forward is really maximizing the employment in the region. We do want to make sure that we can maximize and provide training to people within the communities around our project. So that's something that's very important for us and to the communities around us. We'll be able to employ just under 650 people once we're in full operations. And we do expect to draw at least 30% from the nearby communities. So as I said, we do feel that G Mining Ventures is really well positioned for a development stage company. Rarely do you find all the requirements to be able to get into construction and put a mine into operations. And this is really the sweet spot for our team and our skill sets going forward. As I said, we do feel that we're very uniquely positioned amongst the gold projects that are out there. Very few projects are at this level of development in the sense that have a meaningful scale, a reasonable capex that can be financed, and really isn't owned by a producer company already, and really has all the installation or construction permits, making it essentially shovel ready. So we are positioned amongst a few projects out there, and in Brazil being one of the best jurisdictions in our view in terms of developing a project at this stage. So we do have 2 years of construction in front of us once we enter construction. So we're targeting the second half of 24 to reach commercial production, and obviously spending over just about 500 million in country to build this mine. We do feel that we'll be a very important actor in the region of the state of Pará. So I'll maybe stop there if we do want to keep a little time for some questions.
Sure, thank you very much. So I had a couple questions, and if anyone from the audience has questions, feel free to submit them as well. So I guess my first question is just talking about funding options. So what funding options are you exploring? And are you seeing some of the same access to capital challenges that other mining companies are experiencing?
Yeah, we've started that process, and to be honest, we've had a lot of interest from financiers, whether it's private debt providers, royalty and streaming companies. We also will be getting access to equipment financing from vendors. So really, to be honest, we do feel very positive about the financing process. We do expect that to come together pretty well in the next 2-3 months here.
Okay,
And
then
maybe just a comment, you know, given the context of the current gold market, we do see a lot of interest now into the gold space. Obviously, this is a bit driven by the conflict that we're seeing in Russia, so maybe not the best reasons for having a gold price appreciation, but definitely is attracting investors into the gold space right now.
Yeah, challenging times for sure. And then I guess the other question that I had is, you allude to becoming the next intermediate gold producer. You talked a little bit about M&A and your potential to grow at depth and maybe with some regional targets. Is M&A something that you're looking at to grow the company?
Yes, for sure. I mean, we made the acquisition of Tocantins, and we always saw that as the first step to creating the company and as a founding asset, and obviously do look to M&A to be adding some additional assets into the company. We do want to be a multi-asset company in production from more than one source in the next 3 to 5 years. So M&A is something that we are continuing and looking at various opportunities in South America.
So it would be South America focused in terms of your M&A strategy?
Yeah, we do feel there's a lot of opportunities, and given, you know, our experiences in South America, we do like that part of the world. And in terms of investment, we do feel there's good jurisdictions to be investing in operating in. So.
Okay, and can you give us some of the other parameters that you're looking at in terms of M&A?
Yeah, I mean, Tocantins was one that we were very attracted to given its advanced stage of development. I'd say for other assets, we're looking to projects that need a little more work, more drilling, more exploration, technical studies. So something that's that we can prepare in advance and get ready for development once we have TZ up and running. So definitely looking at assets that aren't at the same advanced stage of development as TZ.
Mm-hmm. Well, I like from an investor perspective, the valuation's fantastic, but from an M&A perspective, it's probably going to provide some challenges. How do you foresee that playing out?
Yeah, I mean, the way we've structured TZ in terms of an acquisition, we really had limited upfront consideration, and we provide milestone payments on advancing the project. So definitely that's one way we're looking to structure any transactions at this point. We don't feel that TZ is getting full recognition in terms of value right now. So making, you know, large share transactions wouldn't be ideal at this point. But we do feel that, you know, with intermediates and majors who have projects, we're able to structure deals that make a lot of sense for us going forward.
Okay, cool. I don't have any other questions. I don't see any other from the audience. Is there anything that you wanted to touch on today that you didn't get a chance to talk about?
No, I think we're very happy to be working in Brazil now. We've been able to attract a lot of good people in country, and so far our experience has been really good, and we feel it's a jurisdiction that's probably the best one in South America right now. So.
Well, that's great to hear, and I think we'll get into a little bit more of the Brazil-focused stuff on the panel. Really appreciate the overview and your time. We'll chat again in a few minutes.
All right, thank you.
And then our next guest on the track is Nick Appleyard, who is CEO of TriStar. Nick, are you available? So TriStar is listed on the venture also under the ticker TSG, and they are developing the Castillo de Sonos open pit gold project, also in Pará State, Brazil. Nick, you want to tell us a little bit about yourself and the project?
Absolutely. I'll just do that, share screen. So, yep, I'm happy to. So thanks for having us on today, Deborah. Yeah, at TriStar, we have the Castillo de Sonos project. So I will give you a quick walk through it now. Obviously, some forward-looking statements. We're going to be talking about what the investors want to hear, hopefully, you know, where our plans and what we want to do in the future and where we want to go. So, yeah, there's uncertainty in any projections into the future. So please take care of that. The highlights of where we are. We're a single asset development company. We have the Castillo de Sonos, which is, or in English, is the Castle of Dreams project in Pará, near the southern border of Pará State. We have just recently finished our pre-feasibility study. It was published late last year. And here's the highlights from it. We've got 1.4 million ounces of reserves. Average life of mine production of about 120,000 ounces a year with, roughly 150,000 ounces a year in phase one. We'll touch on that a little bit more in a little bit later. But yeah, with some really nice economics. I mean, after tax NPV 320 million at 1550 and all-in sustaining a $900 gold. So that's the project we're going to be talking about. It's a really nice development asset in a great location. I think all the speakers have already said what a great place it is to work in Brazil, and I'd have to echo that. It is really good, and I think our new corporate video starts with the term, location, 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 stolen from real estate, marketing, and it really is true. You've got to be in the right place. So just a little on the structure of TriStar. I've been around for about 10 years now. Company was actually formed when Eldorado bought Tocantinzinho from Brasoro, and then TriStar was spun out of that transaction. But we've grown a lot and changed since those days. We have a really good board now, and I think a board that reflects a development company now compared to an exploration company. It's sort of an image of where we want to be, with guys like Carlos Valenia, Eric Zanschaub, Mark Isto, and Jessica Van den Akker. It's a very strong board for a development asset here. We have about 6 million Canadian in the bank right now, and some analyst coverage from both Cormark and Paradigm. The other thing I'd like to point out on here is, roughly 44% between institutions, a quarter of the 23% of the shareholder base are, I call it friends and family, insiders and associates. I think directly board and management probably hold 12 to 14%, and the rest is close associates. And then the remaining sort of 1/3 is retail. ESG is becoming a bigger issue for all the companies, as it should be these days. It's getting more discussion, more attention brought to it. We've recently started to, the way I like to think of it, we're starting to now give an outward look to our ESG program. We've always done the same work, and that's something I'm sort of quite proud of, is the fact we now have a board of directors who focus on it. We have a committee on the board that focuses on it. We have a VP of sustainability, and that sort of all that work from the board right down to the field staff is all integrated. But it's almost gone in reverse because we haven't changed anything we're doing on the ground. So the work in the communities, the work on the environment, the work with the local authorities has always been the same. We've just now documented it and made that publicly available. So it's quite nice, the fact that we were already doing the right work, but now we've got an outward-looking face to that work for us. So project Castillo de Sonos, it's a large land package, just under 20,000 hectares that we control. It's effectively a bowl-shaped deposit with our conglomerate reef outcropping right around the rim of the bowl. It's a paleoplacer, which means it's sort of like those, if you see the TV shows of the guys in Alaska with their diggers and digging up the gravels, it's one of those deposits similar to that, but 2 billion years old. So it was like that 2 billion years ago, been buried, come back to the surface. It's a little slightly metamorphosed, but pretty well intact. And there are mines like that around the world right now. The two most obvious that are very close to Castelo in geology are Tarkwa in Ghana and Jacobina in Brazil. What does that mean to us as a project, as a company, and from the investor's point of view? Is it's really simple mining for us, because this deposit, that whole process of weathering the rock away, transporting it down a river system, depositing it in gravels and sands, cleans it effectively. All the sulfides are gone. You end up with sand and quartz cobbles and fine-grained gold. So there's no sulfides. You get great metallurgical recovery. I mean, really the best I've ever come across in my career. And it comes to surface. So we have shallow open pits. It's a very, very simple project from that point of view. And again, you got that location. We're right within 15 kilometers of BR-163, the main highway that goes up the middle of Pará State. We've got power to the project already. And, and I think, as people have mentioned before today as well, the Pará State is a very, very supportive location to develop mines. So we're in the development phase now. Resources have grown by 8 to 10 times over the last 5 or 6 years now. Great jurisdiction, PFS is completed, and we've still got a lot of work to do. So there's still a lot more gold in the ground. We've still got targets where we have gold anomalies in the soil, Garimpo workings on the surface, and we haven't got a drill hole in them yet. So there's a lot of expansion to do, but at some point you always have to make that decision. When do you stop just doing exploration and start developing and moving it forward and gathering all the data you need to get the permits? So that's what we're doing now. And so the permitting team is led by our VP of Sustainability, Andrew Grant, up in Canada, and then in Brazil by Rosangela. Both of them excellently experienced to lead this team and to get the permits that we need. And we're very proud of the fact that they're doing that. And we're working with the best consultants we can find in Brazil and internationally. That's the one thing I like to drive is, yes, we want to do everything we can to do efficient studies, to do good studies, but we also want to make sure the critical components of any project have got the best experienced brains looking at them from around the world. So, in Brazil right now, tailings dam, one of the biggest issues, PFS, the tailings dam study was completed by, a combination of 2 companies and like 3 continents out of Denver, London, and South Africa, working with the Brazilian team as well. So you're trying to get the best of everything to make sure it's the best of the world-class standard and very acceptable and workable in Brazil as well. And we try and do that on all the critical components of the project. So as I said, we're completing the PFS. We're full speed into permitting now. And what I want to show on this slide really is that we are in a good jurisdiction. So when we submitted our terms of reference for approval, terms of reference is when you go to the Semi-Master State Authority and say, this is roughly the project we want to develop. This is what we think we need to study, and then they come back and approve it, or tell you what you need to study into an EIA to get it done. So that's like a first, not approval of the project, but like, yes, let's get going. But what I like to show is, we submitted that for approval in Q1 2020, and Q1 2020 we got that approved. We needed to expand it, so late in Q1 2021 we expanded it. Early in Q2 2021 it was approved. So we will be submitting our EIA, REMA, and the LP, the prior license submission, this next quarter, in the next few months here, with an anticipated approval in 12 to 15 months from now. So Q2 or mid-year next year is our target for that approval of the prior license, the LP. So just a quick look at what the project is, the size of it, potential of it. Here's the mineral resource statement. You can see that indicated ounces are sitting at 1.8 million at a grade of a gram. The real heart of the project here, though, is Esperanza South. And so you can see out of that, 1.8 million, 1.2 are in Esperanza South and have a grade of 1.3. So that's the economic heart of the project right now. And on top of the 1.8 million, there's another 700,000 ounces of inferred resources. And then on the lower left, you can sort of see that how the resources have grown over the years. And like I said, it's just a matter of drilling, from my point of view, to keep that growth going. Oh, I will also point out that most of our drilling is just shallow RC, down 100, 120 meter vertical holes. Because it does come to surface, we prefer to go along strike and look for more shallow stuff rather than drill deep at this point. So here's the layout from our pre-feasibility study. Very simple project. And I said, the center of it, Esperanza South, that is the economic heart of this project. So for that point, the process facility is located close to that. The power line comes in past there to there. Esperanza East and Center are the sort of satellite deposits, lower grade, and the last few years of production. And and if we can achieve our plans that we want to do now, we want to extend the life of Esperanza South, and we've got plans to do that further. So that's why I said we got that first 6 years of mining at 150,000 ounces a year. With the plans we've got, we would love to extend that out further. We don't know whether we can get one more year out of it, another 4 or 5 years out of it yet. We have to do the drilling and see first, but that is the plan. And there are very, very obvious targets. The other thing to point out here, most of this is a satellite image. You can see mostly we're in farming country. The plateau is scrubby savanna country. It's rocky outcrops and not much grows on it, so it's not much use for farming either, which is nice for us. There's no competing economy for the mine, and then environmentally, the place has been denuded by humans over the last 50 years through farming, logging, informal mining. So the impacts that we will have will be hopefully positive. Apart from the hole in the ground where the mine is, we will do some cleaning up as well. So out of our PFS, here's our operating costs. Operating costs are around $27 a ton. It's going to be a 10,000 tons per day operation, with a head grade of 1 gram, and I said recoveries are 98%. Obviously, mining operating costs are heavily weighted towards process, so that's where the leverage is there. On the capital side, what we have to look at is we've got a $260 million initial capex out of our PFS, and again, the plant is the big part of the capex. We're lucky we've got a very nice, sort of gentle sloping dam area, so it makes for a very efficient tailings dam, and power transmission line is just a short route, 15 kilometers to the highway where the high power, the main power transmission lines are. Okay. So here's the economic results of the PFS. As I said, it's very good. This was run at $1,550 gold and a 5-to-1 exchange rate. I haven't seen what's happened to that exchange rate in the last couple of days, but over the last 6 months, it's been considerably higher than that. But you can see, we got that NPV 320 million, or nearly 400 million pre-tax. But we've got some conservative estimations of our tax in there, down to 321. Cash cost 877, all-in sustaining 900, and a payback time of less than 3 years. So it's really compelling economics. And we still think that there's obviously more mineral to find, and there's more studies that we can do, that we are doing, to see where we can make improvements to this. With the recent run-up in metal prices, it is worth looking at the sensitivities here. Obviously, we ran at $1,550. That's our base case for a 399 million NPV. I show sensitivities at pre-tax because I don't know if the tax works as well as you change metal prices. But if you can see, if you're at spot price now, you're over $800 million, and it's making a ridiculous amount of money. But you can see, and for me, I'm a very conservative type of guy. When I look at these curves, I always look at the low end. I'm like, okay, metal price goes up, you're going to make a bundle more money, and the investors are going to be happy. Can we survive the metal price going down? And the answer is yes. Again, here we got it down to 1,200, and you're still making 12% rate of return. So you've still got a downside. It's not a swing producer. It'll be a solid mine, and obviously, as if things like that did happen, you would improve your operations anyway. So it's a good, solid, producing mine that we project building here. So this is our actual reserve statement. Reserves sit, as I said, at 1.4 million ounces at a grade of 1.1. And again, you can see here that out of the 1.4 million ounces are in Esperanza South at a grade of 1.3. And that's where we want to make the growth, our focus on the growth. We really think we can do a bit more there and push that out further. Okay. I'm missing some slides here. Just some photos of the project to give you a feel for it. That's actually the top left-hand corner is the office there, and obviously you can see water sampling, planting soil, planting seedlings, our nursery. Again, that's water sampling with the ALS car in the background there. That's the activity that's going on at site right now. There's a huge amount of it. We are full steam ahead on that permitting, and well, all of the baseline work is done now. So we are just waiting for the write-up of the EIA and the application of the prior license here now. And that's it for now. That's where we're at. We think we've got a really good deposit, getting into that development curve, and in the right location with a lot of gold and a lot of upside.
Thank you very much for the presentation, Nick. I have a couple questions for you. Okay. So first, I believe you're completing a metallurgical study at the moment. Yep. Can you tell us a bit about how this works and how it could impact the project when compared to the October 2020 pre-feas?
Yeah, absolutely. I mean, when we do a pre-feasibility study, I mean, there's always areas of doubt, areas of where you don't have all the information that you'd want, which is why it's not a feasibility study, full feasibility. And when you're in that situation, you have to take the conservative view and go, okay, we know we can work. In the case we're talking now, at this grind size, we know we'll get that metallurgical recovery. But we had metallurgical tests that indicated that maybe we could do a coarser grind and get very similar metallurgical recoveries. So that's what we're looking at now. And what that would mean was we would, if it works, the tests are up in Reno, Nevada, right? The samples are in Reno, Nevada right now. We would get into a position where if the samples come back as we hope they do, we could either go, okay, well, we can build this 10,000 ton a day plant, but actually put 12,000 tons a day through it. Or if we want to stay at 10,000 tons a day, we can save some capex and build a smaller plant and get 10,000 tons a day. So we would be in the position to have that decision available to us. Or we can, I think the reason I started it, what I was seeing is that maybe, when we get into that phase 2 where our production is a little bit lower, you can just sort of coarsen the grind up and push that material through, the lower grade material through faster, and not lose much in recovery. And instead of producing 90,000 ounces a year in those years, produce 110,000 ounces a year in those years, and just bring the cash flow forward. It is, at the end of the day, it's like there's money in the ground, and you've got to try and get it out and get it to the shareholders as quick as you can. So if you can turn it up faster, you want to do it. So, but that's what it's looking at. Is we know that if we grind to 105 microns, we can get a certain recovery. We're trying to define what happens if we go to 150 microns. Can we get a similar recovery, and can we play some games with the throughput? So we've got a base of certainty where we know what we can do, and we're just seeing where we can improve it.
Okay. Makes sense. And can you tell us a little bit about your shareholder base? I think that you had an investment from Royal Gold a few years ago. And on your slide deck, I think it only breaks down insider, retail, institutional. Can you talk a little bit more about
Yeah, correct. So Royal Gold came in a couple of years ago. They bought a 1.5% NSR from us for $8 million US. And that's basically paid for our pre-feasibility study that we did. But they're not a shareholder. They do hold some warrants with that. But for shareholder base, our largest shareholder would be US Global, Frank Holmes. And then behind him would be Gold 2000 out of Zurich. And then probably RBC, Global Asset Management, are our third biggest institution. They're the three institutions that have followed us and stayed with us for long term, and seem to be always supportive of us. And then beyond that, there's a few individuals who probably hold 5-7% as well, probably 2 or 3 individuals at that level.
Right. Well, it sounds like you have a strong shareholder base. I think I've run out of time with you, Nick, so I'll have to
Okay.
ask the rest of my questions about ESG during the panel. So thanks so much for the presentation. Really interesting project.
Okay, no problem. Thank you very much.
Thank you. And I believe we have our last presenter in the track available, who's Anna Cabral Gardner with Sigma Lithium. Sigma is developing the Grota de Cerrillo project in Minas Gerais state in eastern Brazil. I hope Anna's with us. Hi, Anna. Nice to meet you.
Nice to meet you, Deborah.
Thanks for joining us today.
No, it's a pleasure. Thank you for the invitation.
Do you want to load up your presentation and tell us a little bit about Sigma?
Absolutely. So I'll get going. Well, please note disclaimers because we're going to make quite a lot of forward-looking statements in this presentation. And they're subject to several things. This presentation is on our website, and here is Sigma. So what's Sigma? We're building the largest mine and lithium pre-chemical concentration project in the Americas. Essentially, we are going to commission by year-end 2022. We're in construction, and we are fully funded to complete that construction of the first phase of the project. Sigma has become strategically relevant in the lithium industry globally for four key reasons. The first is the scale. The first phase of the project plans to deliver 240,000 tons of this very high-grade pre-chemical battery-grade lithium concentrate, which is key to the industry at the moment because of point 2, where the market is basically technically in a deficit, which means that pricing has become somewhat less elastic, given that lithium represents such a tiny portion of the overall cost of the battery. And as a result, we're planning to commission this plant by year-end 2022. Why is Sigma strategically unique and relevant? Because the material has a value added, which is called value in use for the client. In which way? The material brings excess productivity of 20 to 30% to the next stage of the process. Essentially, that's what gives its battery grade, high purity pre-chemical label commercially. So we were able to negotiate and achieve an offtake agreement, an offtake term sheet with the largest advanced battery producer in the world, which is LG Energy Services. And LG is a key member of this battery global ecosystem because it supplies pretty much to all of the large automakers globally, from Ferrari to Volkswagen, from Tesla to GM, Fiat to Stellantis, and everyone in between. LG is this common denominator in battery supply. And then lastly, Sigma has become a global leader in environmental and social practices. I mean, we've been recognized by the United Nations at the high-level energy dialogue, and also in both COPs, COP25, which was the one that we went to and presented when very few people knew what COP even was, and then obviously lastly in Glasgow at COP26. So that's Sigma. In the back, you see a picture of our construction site. What is it that we do exactly, right? Well, it's an integrated operation, which if you think about like a integrated steel mill or integrated high value added processing with a mine. So we have a mine, which is spodumene. It's this raw material where there's lithium inside, but it's worth nothing. It has no use. A ton of spodumene is about $50, right? So what has to happen for that spodumene to become a raw material or to belong to the supply chain of batteries? Well, it has to be separated. The lithium oxide needs to be separated. It needs to be purified, and it needs to be concentrated. and then last mile conversion to chemical form to go into a cathodes. But without this purification and concentration to battery grade specs, which mean 14 metals in the periodic table, there's just no battery. The lithium goes to grease, to ceramics, to glass, to batteries for, whatever, but not for cars. Four-wheel cars that you and I are used to drive, not two wheels, not motorcycles, cars. What is special about Sigma is that we mine, but then we are in construction of this plant, which is now north of $120 million, which is about 700 million reais plus, where we actually separate, purify, and concentrate this material, this ore, to battery grade in a state-of-the-art environmental process. We took technology that existed, we perfected, we adapted to the mineralogy of our raw material, this ore, and we not only automated, which is what existed, but we digitalized. We wrote code to make sure these recoveries, meaning separation, purification, and concentration, were consistent regardless of the operator of the shift, like automatic pilot in a plane. Therefore, in this 6 stages of the processes where we conduct this separation, we were able to ensure that what comes out is certified. Moreover, we do that in an environmentally spectacularly sustainable manner, whereby we do not use hazardous chemicals. We recirculate 100% of the water in the process, and we dry stack 100% of the tailings. Icing on a cake, our power is also 100% green power, courtesy of Brazil, which has done its homework on cleaning its electric grid, just like the state of Quebec here in Canada. Now, why is this important? Because water is a scarce resource everywhere there's lithium. Lithium leaches. So lithium exists in arid or semi-arid regions, typically at risk for desertification. We are the first company in the world in lithium, and probably in some of the battery materials, to use 100% recirculation. Moreover, we are the first, and to this day, the only company in the world in lithium and battery materials to do 100% dry stacking, which fills us with pride, basically. So this is Sigma. So it's not an accident that as a result of this, we are able to ensure the consistency of this product in terms of technical specifications. So we enable this productivity in the supply chain by ensuring that the 20 to 30% gains are consistent, but moreover, we are an enabler of sustainability in the entire supply chain. So we have, we've been honored with the agreement with, LG Energy Services, which is the largest advanced battery maker in the world that supplies just the entire auto industry. So we are auto industry agnostic. Whomever wins, the LG wins, and Sigma and Brazil and Vale do Jequitinhonha wins, right? Where are we located? Which is, Sigma is a Canadian incorporated company, so we're Vancouver based. And then we have our mine. It's 100% ownership to our operations, the mine and the plant, which we put on top of the mine in the same region, creating value. It's the north of Minas Gerais. Interestingly, Minas Gerais is the second richest state in the country, in Brazil. And that region is one of the global mining workhorses. In other words, most of the world's minerals come either out of Western Australia or out of that region. And therefore, all the out of the gate infrastructure is already there. These pictures are not stock photos. So we took them. So this transmission line goes through our plant. So we don't have to build transmission lines like we would have if we were in the north of Canada, for example. They're there. They connect us to a clean energy power plant, which is 50 kilometers away, called Irapé. So it's also here. This road, I took this picture on the gate of the property. And then the water is here. This river is right next to us. Ironically, it's sewage water. We'll talk more about that later, but there's water, right? And therefore, all the infrastructure is there. It exists. It's not a faraway location in Brazil. It's in the industrial Brazil, in the industrial Southeast. One point, and we'll touch on that later, that region is one of the poorest regions in the world, unfortunately, because of its semi-arid climate. So it's in Human Development Index is like Bangladesh. And that's a sad situation for all of us Brazilians, which we are contributing in our ways to significantly change. 10 years from now, the plan is that this region is no longer going to have IDH of Bangladesh if all of us here work together in partnership with that region. So scale, right? It's quite relevant. Phase one, 240,000 tons of this pre-chemical battery grade concentrate, which is equivalent to 33 to 36,000 tons of lithium carbonate equivalent. That's about a third of Albemarle, which is the largest global producer. Then phase two, which we built back to back, hopefully we plan to build it back to back with phase one. If the final feasibility warrants, it's going to deliver another 220,000 tons of this lithium pre-chemical concentrate. So it will take us up to 66,000 tons of lithium carbonate equivalent, which is about 2/3 of ALB. And then once we deliver the final drilling resource increase, which is ongoing, we could potentially build a phase three, or we could lengthen further our life of mine for that operation. So 2 line trains lengthen, or a potential 3rd line train. The common infrastructure is being built now. We'll get more to this later. Again, still on scale, look how relevant and how significant. So estimated potential full year production 2023. So we will be the 5th largest global producer. And then estimated potential production 2024, we would be 4th largest global producer. Depends on whether you would add to this list a player called Ganfeng, which is not integrated. This is the integrated large majors, Albemarle, SQM, and Pilbara, which is a junior mining company, such as Sigma in Australia had in terms of scale, right? So it's quite relevant. More importantly, together with Lithium Americas, which is owned by Ganfeng, it's the only near-term producer, meaning in the cycle of 22-23, it will be delivering in this tight technical deficit market. Here's more on scale. I mean, this doesn't happen overnight, right? The founder of the company, who is my co-CEO, started this business 10 years ago. The overall perception was that there was no hard rock lithium in Brazil. He invested his proprietary funds together with his partner, which was the 3G GP Investments, which is the local arm of investments of the 3G group that you know in Canada to own Tim Horton and Burger King, to actually conduct exploration work to a scale of producers, meaning they drilled, measured 50-meter grids, and they did phase one, which at the time we went public, it was 13 million tons reserve. And then they moved it up on the second exploration campaign to the current 52 million tons that we got today. That's a sizable undertaking. And then third campaign, which is ongoing, we do not yet have the final results, but 52 million tons of this, considering the purity, considering the work we do and the magic, the green technology magic we work on that plant, can go quite far. It basically puts us on the position that we announced. That this information on scale is on 43-101, measured and indicated resource, and also 43-101 proven and probable reserve. So this is measured data and audited data. So this is it. Sigma today, this is the scale. Interestingly, there's still 5 more former producing mines to go. So we just focused on 4, which were more conducive with the technology, but there's 5 more to go. So this, it's quite a relevant area. And we select the areas, as we say here, by maintaining the areas that are able to talk well, to fit well within the technological decisions we made around environmental sustainability. So the technology we selected talks well to the further resource increase, because we queue up the areas for the plant based on the environmental, based on the productivity that the environmentally sustainable plant, the green tech plant, will be able to generate. So it's not an accident that we are able to make the technology work. It's a combination of all the way down to the mine, all the way down to pre-chemical level, the area is fully integrated and communicating on metallurgy. So here is where the further resources could potentially come from. So we've been working on Grota do Cirilo. We got 3 more areas in addition to Grota do Cirilo, but on Grota do Cirilo alone, we could potentially have a phase 3. Part of that phase 3 is included in our 52 million tons of resources, and part of that is is going to be unlocked and audited 43-101 on the ongoing lithium drilling campaign. And this is the quality and the cost and the work we're doing. So it's also not a coincidence that we are one of the lowest cost producers. We separate, purify, and apply technology, but then there's mineralogical work of picking the areas that work well with that technology. And we have that expertise in-house. So it's a combination of mineralogy, metallurgy with separation, purification technology that makes it feasible for us to continue with 100% water recirculation and 100% dry stacking, which for us are the core purpose of the company. I mean, without the environmental sustainability, we would not even be here. And then here is the magic that we work. And it's fascinating because a lot of people, when you see the little rocks, think we're just kind of crushing rocks, right? Well, again, crushed rocks, 50 tons, $50 a ton. This isn't crushed rock at all, right? At all. It looks like it, but it's not. We basically separate, you know, the crystals in the previous picture, we detach the crystals from the host rock, purify and concentrate. So it's almost like a mini roundy pelletty, but it's a much more complicated process than just pelletization. So essentially, you know, you can see by the appearance, though, that it's a much better quality than the muddy fines that my peers produce. And hence, we actually enable lower cost in the lithium chemical production, which we, and I'll say this because our secretary is present, we offer for taxation. So we offer the full price of all the value we achieve at port in Ilhéus in Brazil. So we pay a full CFA over a price per ton today of this magic here which is $2,300 a ton. Actually, no, $2,800 a ton versus the $50 a ton I would get for either crushed rock or for ore. So the magic is the plant. It isn't the ore, gentlemen. And here is what the result of the magic is. There's no point of me just saying it. The clients are signing up for it. So we actually can pick the battery makers we want to work with. And we select our clients based on a few criteria. One is environmental alignment. They need to understand the way we think. And think the same way as we do. So we've had the commercial relationship with Mitsui for quite some time. Mitsui's been in Brazil for 60 years. It respects Brazil. It loves Brazil, is the second largest shareholder of Vale, is a shareholder of a lot of other projects in Brazil. It's a believer in our country. Then the other client was LG Energy Solutions, which is the battery spinoff, is a $60 billion, $70 billion spinoff of the LG group that makes different things, including washing machines, but they make only batteries. And they are the common thread in the auto industry, meaning they supply everyone. As I said before, LG supplies Ferrari in Europe. We visited those plants, and they supply Volkswagen. They supply GM in the United States. They're building a battery factory with GM. They're building one with Fiat Stellantis, Fiat Chrysler, which is called Stellantis. They're there across the board. They supply Tesla in China. So they are basically everywhere. They're this big common denominator in the industry. And they acquire this pre-chemical. Why? Because of a secret sauce, because they save costs with this material. And then they reverse commission the last mile chemical tolling. It's their risk. Otherwise, we would end up in a very long supply chain all the way to the end user. So we would lose as a result of that. We would lose value in our product as a result of that. Here is, again, a picture is 1,000 words. So you can kind of see how, this is advancing. This is the crushing area. This is the processing plant area. And then here, it really looks like something. You can see already the construction taking shape. We are 78% completed in the first step of the construction, which was the foundations, foundation construction earthworks. So we've been delivering this construction as planned. And then the next steps, and then Federico is here, he's part of our board. As the board goes approving the continuity of it, it will be followed by civil works and electromechanical build, right? So the plan of the current stage was to be completed by end of April. As you can see, by the 78% completion, we're very much on track to deliver that by the end of April. One thing I want to say that really fills us with pride. We promoted a homecoming campaign to repatriate technical work, technical labor to that region. As I told you, Bangladesh in Brazil, right? So in Bangladesh in numbers, Bangladesh IDH, it's 0.6. This region is 0.65. So it really is. I'm not saying it without numbers. So the construction company said, well, there's no technical people here in the region. We have to bring people from outside of the region. I said, no way, no way. We're going to make it happen. So we decided to launch a hiring marketing campaign with radio calls across the state, across the country. Today, we can say proudly that 77% of our workforce of 300 is born and raised in either Araçuaí or Itinga. So what I want to leave you with is the S in ESG. It doesn't cost a lot of money, but it costs a lot of effort and a lot of will, but it's possible. So we repatriated these people to a region where, they had the skills to do employment like this, but there was no opportunity. More importantly, we're starting to mend the social fabric of the region because these families were torn apart. The women were left with the kids. The husband will go away to provide income. More often than not, they will find new families, cut off the support, and the women were left to support the families alone. So the social fabric was torn apart by the lack of opportunities. So bringing development here mends back the social fabric. So it's much more than the jobs, it's mending the social fabric of an entire region. And these numbers, I mean, one town has 10,000 people. I mean, these numbers are very impactful. Here is the funding. So we got cash and we are fully funded. So the CapEx on record is this. It's filed in our DFS November 2019. I'll guide you to 15 plus minus 15%, which is what happens in FEL3. So obviously plus, right? So you could add 15% here and you kind of get to where we are going to be when we publish the final CapEx, which should be happening shortly. Lastly, going back to environmental, I mean, the work we do, because it's such careful, focused work, has been recognized way back. I mean, in 2019, I spoke at the COP in Madrid about the work we did since 2016 on, developing this business focused on environmental and social sustainability. How so? When we made this investment in the company 6 years ago, partnering with the founder, our mission was to bring sustainability back to the industry in Brazil. And in that first pilot plant, we already had the dry stacking. At that point, those are very painful dollars for us. It cost us 15%, 1.5 more than if we had just taken a shortcut. But we didn't, because it was a matter of purpose for us. And onwards, we kept on doing series of environmental and social actions, including 3 major COVID actions in the region. Third one is ongoing, where we provided now at this point over 36,000 liters of hospital disinfectant to basically support clinics and hospitals that cover 240 people in that serve 240 people a year in the wider region, right? That's how many patients they see in total. So same person, repeat consultations. It takes on the second town, which has 40,000 people. So these 50,000 people, they're served by the network of 16 that we took care of with hospital disinfectant and hand disinfectant, and a booklet to educate them about how to prevent COVID. Action 1 was done in March 2020, when even in the largest hospital in Sao Paulo, it was hard to find hand disinfectant. So it just shows, and this region stayed yellow instead of purple longer than most regions, because early on they were receiving the sanitizing, the precaution, the separation, the educational booklet, which we distributed to pretty much everyone, and learn how to do prevention. So things like that, right? Lastly, in the second wave of COVID, we have served 1.2 million meals. That's a lot, right? For a region with 10 plus 50, 60,000 people. In a massive initiative of donating food baskets, which we're now doing again. So another 1.2 million meals. What we said is, for every billion of reais in investment, we would serve for every 100,000, we would serve a meal. So investing 1.2 billion, we're serving 1.2 million meals. That's kind of the scale of this, right? So what did we do? We took care of the vulnerabilities. We basically, the way this was planned, it wasn't like that. It wasn't on the money. It was about, we looked after the families that were starving, and we got that list from the 2 towns. So we partnered with the towns, and we identified that list. So we took care of those families for 10 whole months. We fed them. One of the things I want to leave you with is that out of the families, out of the people that we took care of, 15 of them actually had the technical skills, and they're now working in our construction. So think about this. A person with technical skills couldn't find employment, dependent on us to be fed. And now they found employment with us, 15. And then this is not relevant for here, and this is our board. So our board, well, this is something I want to say about this. Well, we voluntarily adhered to the highest standards in global capital markets. And that is the United States capital market standards. Why? Because as we started to have higher and higher profile customers, we realized that demonstrating that we were transparent, compliant to the Foreign Anti-Corruption Act, and we were willing to expose ourselves with severe liability if we weren't, was a big, big important step towards the Western markets, towards the United States and towards Europe. So we linked up our operation, our company, to those two markets when we were willing to sign up for a US listing. It was a very important point. Remember, this material supplies the GM and the Fiat Chrysler factories in the United States, right? So ultimately, the way we see it is ESG starts with the G. So we adhere to the higher standards of governance in the world. And here's our board. There's a significant degree of oversight in the board. The key committees are chaired by the independents, Gary Litvak and yours truly, our host, Frederico Marques. And then the board complemented their backgrounds with two very highly experienced technical individuals, both hailing from Vale. One hails from Vale Inco, the other hailed from Vale Brazil, the fertilizer, the chemical business. So quite a lot of expertise there. And the technical committee, just like the other committees, have veto power in the decisions submitted to the board. So it's a way to maintain control, maintain the technical, the independence with the veto over the key decisions. They control audit, compensation, and technical committees. So everything that happens in a company. And that's it. And with that, we can open up questions. I hope I was within the slotted time.
So we don't have time for questions and we don't have time for the panel, but I really appreciate the overview. It's a really interesting story. If anyone has any questions, maybe we can follow up offline. And I think I have to turn the mic back over to Carolina, but thank you very much.
Thank you, Deborah. Thank you, Anna, for another great presentation. It's always a pleasure to have Sigma here with us. Yeah, just as a matter of time, and I would like to now introduce the Brazilian Deputy Minister of Mines, Secretary of Geology, Mining and Mineral Transformation, Mr. Pedro Paulo Dias Mesquita. So Pedro, let me just make sure that he's, I don't know if his camera is on. There it is. Hi, Pedro. Thank you so much for being here today. It's a pleasure for us to hear from you. And also like to invite Guillaume back, who will, after the few words of Pedro in the presentation, conduct a small fireside chat with Mr. Mesquita. So thank you again for joining us. Over to you, Pedro.
I thank you for the invitation. It's a great pleasure to be here with you.
Good morning, everyone. Yes.
Hello, Guillaume.
Okay, how are you?
How are you, my friend?
Sorry, I think I just joined at the last minute, but I just want to make a quick introduction. For those who were not there at the beginning of the event, my name is Guillaume Legare. I'm heading the TSX and the TSX-Ventures exchange activities in South America. And it's a pleasure to really welcome today Pedro Paulo Dias Mesquita, who's currently the Secretary of Geology, Mining and Mineral Transformation at the Brazilian Ministry of Mines and Energy. So Pedro Paulo Dias Mesquita has a Master in Public Policy, Strategies and Development by the Federal University of Rio de Janeiro in 2017. He has an MBA in Financial Management, Controlling and Auditing at the Fundação Getúlio Vargas in 2010, and graduated in Economics also from UFRJ in 2008. He served as Sector Intelligence Manager at the Department of Manganese and Metals in the BNDES, and also served as advisor to the presidency of the FINEP. So this is the quick introduction. Thank you very much, Pedro, for being with us today. I know it's the last activity. We have a 15-minute fireside chat. We're trying to get the most of your knowledge and your action in the Brazilian market. As we heard in previous presentations from my colleague Dean, also from Neville Dastoor from Infor, it's pretty clear that mining markets are showing appetite for clean energy transition. We've seen the demand for precious metals. We've seen the demand for base and diversified metals. And this is obviously an interesting time to look at Brazil mining sector. I mentioned at the beginning of my presentation earlier today that there are currently 38 TSX and TSX-Ventures companies in Brazil with 95 mining properties. And this is like a small amount compared to what we see in LATAM. LATAM is the most important market for the TSX and the TSX-Venture, but we need to see more, we need to see more companies from Brazil. We need to see more stories like Sigma that we just heard, Sigma Lithium and the other presenters. So I think it's an interesting opportunity right now to talk about Brazil, to talk about the mining sector being an engine of growth for the Brazilian economy. It's a critical moment also in LATAM to discuss access to capital for the mining sector. Markets are competing for capital, as you all know. Investors are looking at the risk and opportunities in LATAM, political stability, pro-business environment. And we're getting more and more noise, I would say, in the market right now about the rise in Latin America of the resource nationalization. This is not something we're hearing from Brazil, but it's certainly something where we can also comment on this. So my first question for you, Pedro, is what are the key strengths of the Brazilian mining sector? And also, if you could comment on the challenges to invest and do business in the Brazilian mining sector, please.
Okay, Guillaume, thank you for your question, and thank you all for having me here today. It's a great pleasure to talk a little bit about the good work of Brazilian mining. We are actually living a very good trend, and I used to say that we're starting to reap what we have sown. So in 2021, Brazilian mining reached the production of $65 billion and a 7% growth of volume of production. So with a good job creation, 10% growth in the mining jobs, a mining balance of trade that was 50% higher with net export reaching $49 billion. So these are great numbers that are starting to appear and make real for what we've been looking and watching in the Brazilian market in the recent years. So Brazil is a stable pro-investment democracy. We understand very well the needs for the investors to make decisions for Brazilian markets. That's why we're experiencing great success in auctions, for example, for opening our oil and gas marketing, auctions of infrastructure projects, and also attracting capital for mine investment. That's our subject here. Our mine investment forecasts keep a trend of growth and reached an amount of $41 billion expected until 2025. So Brazil has a long tradition in the mining sector, which provide us with great mining workers, good suppliers of goods and service, technological institutions, logistics and electro infrastructure for a lot of targets, and a regulatory stability that is added to our geological potential to make Brazil one of the best places that I consider to invest in mining projects nowadays. And to talk a little bit about what we have sown, it's about governance, predictability, and legal safety. It's a move strengthened since 2019 with the structure of Brazil's National Mining Agency that replaced the old Mining Production Department. And with that came a new time of more transparency, improved regulatory governance, and market participation for liberating the mining norms. And also a very good focus on making easier for the investor to apply and meet the requirements for the concession of mineral rights in Brazil. So we are very proud of the work done by the agency that includes the digitization of the process of mineral concession. For one example, now Brazil counts on a total digital process for exploration license applications. And that gives us the capability of giving a permission for exploration within 30 days. So it's a huge change in relation to what we expect to see here in Brazil. About the regulatory agenda, I'd like to point out the publication of two recent resolutions. The resolution number 94 of February 2022 for mineral resource and reserves reporting standards. They will put Brazilian mining the same pace of our peers in terms of qualified and standardized information reported about our mineral deposits. And we are adopting these international standards as 43101 for the reports required in the mineral rights process conducted by the national agencies. With that, we expect to provide the necessary level of trust to investors looking for opportunities in Brazil. I also point out the resolution number 90 of December 2021 that established a safe process for registering and consulting the condition of mineral rights offered as collateral in financial contracts, which provides a safer condition for banks and other financiers to operate in the Brazilian mining sector. We are also very proud of a cooperation agreement we signed between our secretary, our geological survey, and the national agency that will provide the market with much bigger volume of exploration data came from operations that were not continued in the past and might reveal a great potential for new exploration work. So this way we are facing one of our challenges, as you asked me, that is the dissemination of geological information. So we're improving that. Another challenge is related to our environmental licensing to find the best way to conciliate environmental protection and sustainable growth. And of course, that is our main concern and object here. We're also very proactive on the development of a financial market culture for mining projects in Brazil.
Thank you for your explanations. As you well explained, we've seen Brazil making impressive improvements in its legal regulatory framework over the past few years, reducing the regulatory burden, having more market-friendly approach. And as you realize also from today's presentation and overall from what companies are saying, investors and the market is looking at ESG practices and also how the role of mining can play in the green revolution. And I think there's plenty of opportunities in Brazil. Can you comment further on other actions or programs that would support mining companies operating in Brazil, and also how Brazil can be positioning itself for the greener economy?
Sure. That's a great question, Guillaume, because Brazil has one of the world's cleanest energy matrix, and with a participation of renewable source corresponding to 3 times world average. And when talking about electric matrix, 85% of the electricity production in Brazil comes from renewable sources. So this is a great advantage to attract investment for green mining projects. And considering the mineral intensity of the clean energy transition, it's important that the production growth that is needed come from greener source. And Brazil has a great advantage with this. So to tackle more specifically the challenge facing here, we, beyond all the advances I already mentioned, the Minister of Mines and Energy launched last year a specific policy to help companies and navigate in the Brazilian environmental licensing system and meet appropriately the requirements for the viability of relevant projects for the production of strategic minerals. That includes these minerals demanded for clean energy transition. So the policy is called pro-minerais estratégicos, we could translate that by pro-strategic minerals, and started on May 2021, is coordinated together with the Investment Partnership Program, PPI, that works on a lot of opportunities of investments in Brazil. So until now, we have already 12 projects listed in this policy with around $9 billion of projected investment. And it involves projects on copper, gold, iron ore, phosphate, and potash. So it's a huge policy so as to help the companies to meet this challenge of making a greener mining operation and meet at its best the requirements of our licenses. So, and what I also like to point out here is the advance that were made related to the safety of our operations. So Brazil made a huge reformation of its rules for inspection and safety of dams, for instance, we all know, and we also published a new resolution tackling the problem of the tailings, so as to improve the capability of the companies to recover the tailings of its process. So we are dealing on two sides, I can say, two fronts, fostering the recovery of tailing and also working on inspection of the way that the tailings that were not able to be recovered are displaced.
This is great. Thank you for those explanations. It's really just an initial discussion in preparation for the presidential PDAC in a few weeks in June. We're very happy to see your leadership around mining. It's quite impressive to see the ecosystem in Brazil that is growing, the amount of stakeholders connecting between Brazil and Canada, and thanks to the BCCC also for the leadership around this. But we're really happy to see the pipeline of companies, private and public, that want to talk about their experience, and we can certainly learn from their experience. So thank you, Pedro, for taking the time. And I think our time is up, so I'll turn it over to Carolina to end the session.
Guillaume, if you allow me, just to bring for participants here one other policy that we are working on. So this one is specifically focusing on the financing of mining projects. So we signed an agreement with the Brazilian Development Bank, which is the biggest long-term lender of Brazil, for dissemination of financing mechanisms for mining companies, and also the structure of new products to raise capital for mining projects. And one of the targets are ESG projects in the mining operations. And we are also very focused on developing this culture of financing mining operations in Brazil. So we launched on October of last year a network, a collaborative network that is called Invest Mining, and everyone that would like to access, I'm gonna put here at the chat the address just to write investmining.com.br, and you may apply for participate of this network that has the object of gather all the financiers operating in Brazil, banks, fund managers, and we have been very, very successful in put this team together in working for developing this culture. We count on you there. We've been in some meetings. Carolina also participated in a lot of them. So we are very proud of what we are building and really creating this place for exchange of experience, so as to bring also the Brazilian banks and managers more proactive to the mining market. So I'd like to reproduce some few words of our Minister, Bento Albuquerque, on his inauguration, that we're making our work to in an harmonious and transparent manner, in constant dialogue with the various instances of government, the business community, and society. That's the way we are improving our mining sector in Brazil. So thank you more of your time here.
Thank you again, Pedro, and we're happy Brazil again this year is one of the PDAC country sponsors. So we look forward to see you all in person in June, and thank you for your participation today. It was very interesting discussion, even though we had short time to discuss, but you really raised some very important points for our audience. Thank you.
Thank you. Thank you, Guillaume, for conducting this interview. Thank you so much, Mr. Secretary, for being here with us today. We look forward to seeing you in person in June and to host like incredible discussions in person here in Toronto. So we would also like to thank all our speakers and our companies that attended the session today. Thank you very, very much. As well as, of course, I can't forget to thank our sponsors. So our platinum sponsors, ValOre, Toronto Stock Exchange and TSX-Ventures Exchange, Sescom Barrier, Baker McKenzie, Sigma Lithium Corp, 4B Mining Corp, and our gold sponsors, Aerocopper, Mineração Caraíba, Export Development Canada, Wheaton Precious Metals, Equinox Gold, Yamana Gold, and our silver sponsors, Brookfield, BMA Law, Landing Mining, Jaguar Mining, Bemisa, Horizonte Minerals, Álvares Massal, Promon Engenharia. And also, of course, the members of our mining committee, our diversity and inclusion committee, and our ESG committee for the inputs, insights, and support. Before I continue, I saw we have a lot of speakers here, so I don't know, Fred, if you wanted to say a few words before we finish, or Anna, Charles. If there are any questions for the secretary, we're going off script here, but since everyone is here, please let me know.
Just a big thank you to everybody. Fantastic event. Have a good afternoon.
Thank you, Fred, as well. Anna, I know you raised your hand, so I'll pass the mic to you for a second.
No, I want to publicly congratulate the Pedro and his team and this government. We've been in Brazil for 10 years, and I'm not just the co-CEO of Sigma, but I'm a co-founder of a fund that now has over $1.3 billion under management, and another double that available to us. So it's quite a large sum, and at the moment it's mostly Brazilian mining. And I think as an investor, it's palatable, the difference in legal certainty, regulatory environment, security and confidence for the investor that the current team occupying the Ministry of Mines and Energy bring. The regulatory environment just keeps on getting better and better and better. And we run a global fund, but as a Brazilian, that makes me really proud, because it makes Brazil a more investable jurisdiction. The work you guys are doing are being noticed globally. We were in California and people are singing praises for Brazil as a jurisdiction. And that's a huge achievement for your team. So I wanted to publicly say that, wearing my investor hat, because it is confidence that drives the dollars. The dollars are available and you guys are doing your part. You're delivering the legal certainty that all us investors need to keep charging ahead. So I wanted to say that publicly because we felt it in the portfolio company.
Anna, thank you very much. I'd like to share this with our geological survey and our national agents. It's a great work of all of us and all the teams that are working together in these institutions, so as to make Brazilian mining really a more realistic and good environment for every investor.
Thank you, Anna. Thank you for the words. And we echo here as well. This is the sentiment that we're feeling here in Canada as well. So that's why I think we're so excited to finally be back in person and to host Pedro here in Toronto in June as well, with his team and the whole Brazilian mining community that I know will be attending the conference. So again, without further ado, so just thank you everyone for joining us here today. As I mentioned, we will be hosting the in-person Brazil-Canada PDAC in June. So if you're coming to Toronto, you can't miss the discussions. And also, again, thank you for everyone that join us here today, our sponsors, our partners, and our members as well. And of course, the speakers and the companies that presented. Count on us for anything you need. We're here at your disposal to continue promoting the opportunities in the Brazilian mining sector. So if you want to learn more about the benefits of becoming a member of the BCCC, please feel free to reach out to me anytime. Follow us on social media to be informed of our activities and the upcoming events. So we hope that you all have a great week, and we look forward to seeing you here, back here on Tuesday, March 22nd for a second discussion on the regulatory updates on daily dams management in Brazil. So thanks again. Hope you stay safe, and we'll be in touch. Thank you. Thank you, Pedro.
Thank you.
Thank you everyone for being here today. And of course, our partners too, TMX, Infor, and Adelaide Capital. Thank you.